SA, I just want to really welcome you and thank you for giving us allowing us the opportunity to engage with you on a very relevant and serious topic. That's our risk management and how to compile a risk register and how to keep your tabs on mitigating various risks. So I'm Christoph van der Rede. I'm just going to ask our president, Jaco Minnaar, to officially welcome everyone. And then after that, Andrea to just introduce you as well. And then we can fire away. Over to you, Jaco.
Thank you very much, Christo. I just want to welcome everybody. Thanks very much for your time that you afforded to be here today to help us better understand the risk landscape in which Agri SA operates. I really hope you find it of value, but I also hope that you find it of value to yourself as well, not only to the organization, but to yourself as well. I think the purpose of today is to better understand the risk landscape. What are all the risks that impacts on Agri SA? Learn how to identify those risks timeously. I think we need to understand the risks so we can know how it impacts Agri SA and how it impacts the bigger business. It's important to understand the impact of that and to quantify the impact on the business, but on our clients as well, the farmers on ground level. Then we need to learn how to determine the risk drivers. It's one thing to know the risk. The next one is what's the driver behind that risk. Because only then you can start to mitigate that risk and mitigate the actions or do the actions how you can mitigate the risk on yourself and as a farming community or agriculture as a whole. And then lastly, we need to know how to monitor the risks. If the risk changes, it becomes more important or less important. How do we deal with that then? Out of that, I think we will start to develop a management tool on how to set our priorities in terms of our strategy in Agri SA as well. So this is a very important session, not only internally, but I think externally for us all. I think it's a development tool that you can use in your own business as well. It's a development tool that you can use in your own life as well. Risk is everywhere. It impacts everyone. And how to better learn to understand those, to interpret those, and how to mitigate that risk at the end of the day. And I think for that, thank you very much for attending this. I believe that we will all walk out here better persons, understanding the environment better, but also contributing better wherever we are involved on. So Deon, thank you very much for your time as well. We're really looking forward to learn from you and to help us, give us the tools to interpret and to better manage what we experience every day. So thank you very much for that, Christo. Thanks, Deon.
Thank you, Jaco. I will now ask Andrea to take the lead, and you are our risk manager, and thank you for all the work that you've done to get Deon on board. And Deon also, I've just looked at the work that you've done, the presentations. It's really impressive, and it really makes me personally very excited. So today we've got, just to give you a quick background, Agri SA consists of 3 chambers, a provincial chamber, and that consists of 9 provinces. They focus more on the provincial policy issues that affects the agricultural sector. Then we've got a couple of board members present as well, because the board is ultimately responsible for mitigating various risks. And then we've got various departments and various centers of excellence. And then we also have the commodity chamber present and the corporate chamber present. Their leadership are all present. So it's a big organization with various elements, and obviously each element is responsible for mitigating a particular risk, so that at the end of the day, the entire ecosystem of agriculture and Agri SA in particular is managed through a proper risk matrix, or whatever you may call it. Andrea, over to you.
Thank you, Christo, and welcome everyone to this session today. And thank you, Deon, as well as joining. We are looking really forward. I have the privilege to introduce him to you today. So first, Deon van Westhuizen. He's from Next Step Academy. He is a chartered accountant by profession. He is a certified internal auditor, as well as King 4 and the ISO risk specialist. He's an international consultant for the USAID, the European Union and Commonwealth. He's also an international speaker on governance, risk and combined insurance. He designed also ERM frameworks for National Treasury, Botswana government, Lesotho Petroleum Fund, and he's also an extraordinary lecturer at the University of Stellenbosch. He's also accounting officer for Next Step Academy, a municipal rating SA, Watermark Insurance Services. He's also a change agent. He's a grandfather. He's married. He do international Ironman events in sports of his choice, and he will participate in the World Championship Adventure Racing event in October this year. And he's a God-willing man. So thank you, Deon. This is an impressive CV, and we really look forward to have you today and just to tell us some more about risks. Thank you.
Thank you, Andrea, and thank you, Christo and Jaco. I'm humbled and really it's such an impressive. I worked through your annual report, 22 annual report, and I think I'm humbled with all the wonderful work that you do. I'm also impressed with the fact that you are one of the main GDP drivers, and that you keep on exceeding, the inflation rate and the specifically. Not by a small margin, and that the future of Agri SA is actually growing. There's, if you look at the predictions that you guys have in terms of future production, it's absolutely massive what you are doing for the country. And I think that is why risk assessment is really, really important right now. So I'm going to start, Christo, with permission here. I'm just quickly going to start. I decided only to set up the session with 11 slides and just to illustrate to you where I think we should be going. I did look at your risk assessment that you generated in 2020, and I used that as a base to develop the discussion document for today. What is important with risk management is if we want to make it work, risk management must inform decisions. And if we do risk assessments once a year, then they become irrelevant quite quickly. And in a country like South Africa, where the dynamics of change and the dynamics of politicians and the political will and those sort of things change on a regular basis, I think we need to get to a point where we really need to look at risks differently, and it needs to inform some decisions. So just to summarize, I just need to move this a little bit so that I can see my own slides. I think internationally, if we look at the issues in Africa at the moment, is that, just a second, I just need to move this. Okay. If we look at the international focus in South Africa, I think, we are producing, we're a trading institution, or we're a trading country, we're part of the global economy. I think that is really important for us. We are a net exporter of products, specifically in your area, and in many other areas we're a net importer of things. What is important for a developing country like ourselves is that we keep on building our foreign currency as a reserve for the country to keep the rands, maybe more stable, and the opportunities and so forth. I think the second opportunity is the fact that the world is changing into a digital economy. I think that is important, and I try to build that into your risk assessments as well. Security is a big issue in your industry. Security of farms, security of product, security of movement and so forth. One of the big issues international that the world is worried about in Africa is the migration, and we in Cape Town are seeing it every single day. The migrants are flooding into Cape Town, and Cape Town can simply not cope with the volume of people that we need to accommodate, and that includes all the services. And even though Cape Town is I think an exceptionally well-managed municipality, if you compare them to the rest, they are not perfect. They've got many weaknesses. But if you compare them to the rest, I think they are well organized and well structured. But even with that, I think migration to the cities is becoming a big issue. We see that with the sanitation systems, the sewage systems here, we have water losses and so forth there. The other big thing is climate change. Climate change is important in our country, legislatively not so important right at the moment. We are a little bit lagging behind the world in terms of climate change. But if we look at the bigger picture, is that soon we will start talking about carbon zero and those type of things. And I believe there's a big role that Agri SA can play in carbon credits, and we can talk about that a little bit later. China and Africa relations are a worrying factor across the continent. The Chinese are investing heavily in our country, and as they are investing in the country, there's a tendency that if we don't repay the loans and the investments that they've made, that they actually claim those important assets. And when I talk to Botswana and Lesotho, for example, and even Namibia, they are reluctant to take Chinese investments simply because the risk of eventually losing ownership of those big assets are worrying them. And I think the focus is on Africa, the COVID recovery and so forth. I think we've sorted that out by now. In terms of South African risks at the moment, I just want to add 2 or 3 of those that we need to think about and that you already know. I think the biggest risk that worries me at the moment is our cybersecurity risk. We are being targeted on every single front in terms of hacking. I know municipalities that have been hacked. I know insurance companies that have been hacked. I know, in almost every industry there's been hacking. In the banking sector, Kentucky has been hacked, Ster-Kinekor has been hacked, and so forth. And I think in terms of the big information technology systems that we have across the industry, we need to take this risk on board. We are a net exporter, as you've indicated in your report, but the big challenge is around the infrastructure and the fact that it's going backwards every single day. I think that is the thing that worries you the most, and that influences the movement of stock and the movement of produce and so forth. Can we fix it? Is there political will to fix it? I think there might be will to fix it. I don't think we have the cash flow to fix it. The World Bank made a study a while back that that's already 10 years ago, that we need 98 billion rand to fix things that are broken. I think we can probably multiply that by 10 now, and that is only fixing things that are broken. It's not even maintaining things that really needs urgent attention. I think another risk that we are facing broadly in South Africa is the fact that we are living in a failing state, and it's the big institutions that we really need that is just not producing at the moment. And I think the two that you've identified as well is probably Eskom and Transnet. And there's big movements around Transnet. You might have read in the newspaper on Sunday that Transnet is actually in a worse state than Eskom, and that is worrying. Inequality remains a problem, and I saw that in your annual report as well. As I can see you have a focus in terms of inequality, and how do we develop small and medium-term farmers and businesses in that specific area. And I can see the urgency and the commitment that you have to do that. But we are battling inequality at the one side, and we are battling minimum wage rates on the other side, and then we sit with this massive unemployment figure of 38.6%. I think that is really something that we need to take into account today. Migration from foreign countries, specifically from Zimbabwe, I think remains an issue. Somebody sent me a video last week who was at the border at Beitbrug, and then they show us this picture where the police actually leaves the scene and they go back to wherever, and the next moment about 200 Zimbabweans cross the road, get into a bus, and they're on their way to Johannesburg. And that border control and the fact that we are sitting with a huge influx of foreigners becomes an issue across many industries, and specifically in yours. I think one thing that I want to give the President credit for, and this is a specific focus area in my life, is that I think he's addressing fraud and corruption. We can't see it now, but the processes that the President has put in place to address fraud and corruption is significant. And I just want to highlight 5 very quickly, because I think we can build on that. The first thing is the fact that he had the step-aside policy. The second thing is he gave the Auditor General superpowers in terms of prosecution rights, where they no longer need to consult with management when they take processes forward. They can really now prosecute or identify, investigate, start a case with SARS prosecute, and eventually jail people. That is a superpower. The Zondo Commission had wonderful successes as a third point. And what I like now is that all those stories that we see in the Zondo Commission report and all those big companies that participated in fraud and corruption, there's actually a lot of consequences that are happening right now. We've seen the Steinhoff attachment of assets. I've seen recently attachments of assets in Mpumalanga for some political officials, and I think that's going to accelerate over time. The fourth thing that the president has done is he started investigating every single employee in the service of the state, and to make sure that those employees in a direct or indirect manner is not doing business with the state at all. And they've identified 4,814 individuals already, and every single one of them has been charged, and the monies that they have derived from any business from the state will be recovered and so forth. So I think there's a big effort, and the fact that the president has put those things in place has started to change the landscape. There's a change in the NEC. He surrounded himself with people that thinks the way he does, and that he wants to create ethical, transparent leadership, and that's a good point. And then foot and mouth disease, it's a problem in South Africa, it's a problem in Zimbabwe, in Botswana. I have read that the movement of people and cattle, for example, across the borders are not well controlled, and that has spilled over to South Africa as well. So in the world, there are three models. I think most of you are very familiar with the King report. Mervyn King started with King 1 way back in the 90s, and he's now busy with King 4, and he published King 4 about 3 years ago. And King has got all the big drivers that I've seen in your annual report. King talks about people, profit, and planet. You might use different words. You might use social in terms of people, and you might use environment in terms of planet. But you are definitely committed to the three values within the King report: profit, people, and planet. The ISO 31000 risk management tool is a tool that is very useful. I believe it's a little bit more applicable on operational risks. It works fairly easy and so forth. And then we have COSO on the left-hand side. COSO has been designed in America in 2001. COSO is a big driver, it's a big methodology, it's applied by a lot of companies. When I designed all the risk management frameworks, I applied COSO. And what I like about COSO is the fact that COSO has got a very specific layout. And if you look at COSO, as you see it on the screen there, COSO has got 5 legs, those headings at the top. But I want to look at maybe just a couple of them. I don't want to talk about all of them. But I think the first thing that is really, really important for an organization like yourself is that you have a huge reputation in terms of good governance, in terms of a risk culture within your organization. And you can see in bullet point number 1, it starts with the board taking responsibility. People at the top, tone at the top, lead by example. King 4, ethical, transparent leadership. And I think I look at your structures in your annual report, you've established them well. There's committees that are looking at every single element of your business. You are making good interventions. There are almost no reputational risk issues that I've picked up. I searched the internet. Your reputation in terms of good governance is really up there, and that is an excellent starting point. You've established your operating structures, number 2, to look at every angle of the business. You are very clear about your own mandate, so that is well done. Then I want to, number 5, you've attracted, developed, retained capable individuals that are participating in your structures, that are driving your business processes, that can interact with government. So I think in terms of your governance and culture, you are really set up to take this organization forward. What is happening in the second bullet point? I just want to talk about number 7. And when I go to the next slide, I will be able to define it more specifically. When we look at risk, it is important to realize that 10 years ago, risk was about those things that can go wrong. And then we wanted to mitigate them. Or we want to avoid them, or we want to transfer those risks to somebody else. But what has happened in the last 5 or 6 years, and maybe with a little bit of an acceleration during COVID, is that all the big thinkers on risk management now identified a second part of risk. So the first part is what can go wrong, and let's manage that. The second part is not taking opportunities. And not taking opportunities is becoming a bigger risk than mitigating those things that can go wrong. Example, for example, is Eskom. I mean, we keep on managing Eskom, we keep on maintaining the power stations, we keep on doing a lot of things. But what we've neglected to do 10 years ago is to really take the opportunities to go green, to go sun energy, to go wind energy, and to do a lot of things that would have put us in a different place now. And there's a lot of opportunities that went wasted at the time. So in your business, I saw one comment that I think, Christy, you made it in your statement in the annual report, where you said you've got a very balanced decision that you need to take. On the one side, you are a participant. There's a political agenda. There's a lot of laws and regulations that are influencing your activities. And right now, as a leader of this team, what you are doing is you are defending. You are always defending. When you go to a meeting, it's almost like, we need to defend our positions and so forth. And how long does that take? So defending, to me, would fit into that first category, is where we have risks and we want to mitigate them. And every time there's an issue, you interact and you have good successes there. But there's also the other angle. Is how do we start to create value by taking action, by taking initiatives, by taking opportunities, and with that, taking some risk. With risk comes return, and I'll come back to that just now. If we go to the third bracket there, performance, what changed since 2018 specifically is that the big thinkers on risk has tied risk to performance. The more you want to perform, the higher your risk. High risk, high return, that's same analogy. It's really, really important. And I will show you on the next graph what I am trying to achieve is that if we do risk once a year, we're not going to be able to measure our performance against the risk and the risk appetite that we are taking. And then there's a specific process to go through that risk. If we go to the fourth column, I think number 16 is important right now for the maturity of your risk management process. You need to continuously review your risk that you have. You need to look at the changes in risk. You need to look at your performance. If you start changing performance, how does that reflect on your risk portfolio and so forth? And then we go to the last one, number 18. It's all about technology. It's all about technology. If you want to do risk management properly, Excel is probably not the way to go, but it is an investment in terms of finance and so forth. Somewhere along the line, if you really wanted to work, risk management is about technology. The world today is about the big things, artificial intelligence and data, big data and Internet of Things and data mining and so forth. And risk management is riding on the back of all of that. So I think that is something that will come your way. I just want to go back there. And then the last one is then, of course, regular reporting and specifically in terms of risk and performance, not only on risk. Christy, I wasn't asked to do this, but I'm just putting it on the table there. And if anybody in the audience is a specialist on combined assurance, then you will immediately recognize that this is a 2013 version. It's an out-of-date version, but I like this version because it's just clear in terms of this picture that you see on the screen. Every person in this audience, apart from your risk manager and your internal auditor, is sitting in the first line of defense. Whoever is doing operational activities is called the first line of defense. And the first line of defense is also the people that need to do their own risk assessments. They take responsibility for risk. They need to identify their risks. They need to put control processes in place. And they need to continuously make sure that those control processes are working. What is important, of course, I just need to say, if you're the board of directors, you're not sitting in the first line, you're sitting right there at the top, just below the blue line. You can see it's governing body, the board and the audit committee, that's where you are sitting. And you rely, as a board, you rely on your first line of defense to tell you whether things are going right and wrong. But what is really important for a board is that you need to have a strong risk management function. And if you look at the second line of defense, the third line there is called the risk management. So risk management is that tool that on a real-time online basis can inform and validate what the first line is telling you. I want to use an example just to illustrate this, and I don't want to labor it. I know we've got other things that's more important today, but if you look at Steinhoff, the board committee was a really strong board committee. I mean, people like Westhuizen and the gentleman from Techie Town, they were all in the board of directors, strong governing body. And then they had Marcus Jooste, who was sitting in the Steinhoff leg. And Marcus Jooste, I would imagine, every time there was a board meeting, the board would ask Marcus Jooste, Marcus, can you just tell us, how's it going in Steinhoff? Is it going well? What about the profitability? What about the asset growth? What about this and that and the other? And we look at the share price and we impress and so forth. And every single time, Marcus would have confirmed that. The share price did increase, the value of the company grew, there was a lot of new investment in the company, and it was a success story and everybody bought shares. But I think what the board needed was a second opinion. Because every time they heard it from Marcus, they heard it from the CFO of the company that everything is going well. But if there was an effective risk management, they would have asked risk management some questions. They would have asked about the valuation of assets. They would have asked about the accounting transactions and the overstatement of the profits and so forth. And that would have given the board a second set of information. And that is the purpose of risk management. Is when you are driving big processes, by just asking the first line is simply not good enough anymore. Every single company that is failing, I often ask myself, why is the risk management not informing the board about these things as and when they happen? And there are two reasons for that. The one is the risk management only happens once a year. And if you do it that way, then the risk management is ineffective. And we know what the risks are. It directs some of our decisions, but it does not inform when we make big decisions. And then the third line of defense is a strong internal audit unit. So what your internal auditors do is validation. They provide assurance, they look at your controls, they find the loopholes, they make recommendations to close them, and they can also talk to the board. They can inform the board via the audit committee, and now the board has this opportunity to get information from three sources. The guys doing the job, the guys monitoring risks across the organization, risk management, and internal audit telling us about the loopholes and the controls. And that is called combined assurance. It's an old model. They don't talk about the three lines of defense anymore. They've changed some of the words, but the principle is extremely well organized. So you're starting with risk management. I think in my own mind, your risk management is on a lower maturity level, and there's nothing wrong with that. The fact that you start risk management and you now want to make risk management, you want to implement it and grow the maturity and so forth is exactly where you need to be. And then internal audit plays a role as well. So in your annual report, with your AA, I think it's AMP, where you identified those big drivers that you are focusing on now, you know them better than me. And most of these things should be driving our risks. When we look at the risks, we need to look at the things that you want to achieve. And these are the 6 big drivers that you've put out there. I think there's probably a 7th one we can add, which is the security of the farmers and the land and that sort of thing as well. But these are the 6 big drivers that you have. And we need to start here to actually eventually get to the risks that we need to manage. Short summary, I don't want to give you the definition of risk management, but just to highlight 3 things. Number 1, right at the top, risk management should create value. It does protect value, but risk management should create value. And how do you create value? Is by understanding exactly what is the risk out there, how much risk you can take. So that's a change that I want you, if you don't have that mindset at the moment, that I want you to just maybe think about. Risk management is a tool that informs you when things can go wrong, we understand that, but also informs you about how much risk can you take. And if you take risk, you need to have certain checks and balances in place to warn you when that risk is spiraling out of control. In our country now, you can imagine, and let's move out of your sector, we need to do some big things to get this economy going. We cannot keep on growing at 1.8% when the population is growing at double that rate. We need to find jobs for the young people. We need to find business opportunities. We need to increase the tax base. We need to increase government income in terms of, for all the expenses and the capital infrastructure that need to. To do that, we will need to start taking some risks as a country, and we need to just populate those risks and manage them within certain boundaries. And I'll come back to that just now. So risk is not the negative part, it's also the positive part. Number 3, that third bullet point there, risk management is part of decision making. And I will show you in the next graph, is that risk, every time we make big decisions, we want the risk management to be part of that decision. But to do that, you need to populate your risk in the right way. And then number 5, second one from the bottom, number 5, risk management should be systematic. And what that basically means, it runs 24/7. So risk management, if you really want risk management to create value and you want risk management to inform your decisions, then you need information flowing from that second line of defense on a regular basis. And when you have big board meetings, you need to make big decisions, you want the risk management to be there right in the middle of those decisions. A good example is if you go to the bank and you ask for an overdraft, their risk management system is absolutely systematic, because the moment they do that, they look at your credit record, they look at your income. With a push of a button, they can get a perception as to whether you are good for that credit or not. And your overdraft is approved in a short space of time. And that makes risk management relevant, because it's really systematic. It's built into your systems, built into your processes, and so forth. I think that is something that we will achieve somewhere down the line. That's not maybe achievable in this specific year, but in any case. So I'm skipping one slide, but if you can see on that slide bar, if I can call it that, there are three categories of risk, or three perceptions of risk, and organizations need to position them on this scale. And you will find that, and I want to use a specific example, Drakenstein municipality, which is down here in the white in Paul, brilliant municipality, have clean audit reports, strong management, really, really strong management, almost no fraud and corruption, nothing significant. Really, Johan Leibrand is an excellent municipal manager there with a strong financial team around him. And they've just been voted, one of the best municipalities in the country, if not the best. They just have two challenges. The one challenge is they're not very liquid, so they're very sort of under cash flow pressure, but they're managing that well. They are over borrowed, and now they need to move out of that. I disagree that they are the best. And here's my reason, is that they are so risk averse. They absolutely refuse to take any risk. They get clean audit reports because every single process is checked 17 times. Risk averse means that they will put out a tender in January and it will take them 10 months to allocate the tender. And the reason is the quantity of checks and balances they build into their processes. They do not want to take any risk. And therefore, they are really struggling with their liquidity. They're sitting with a current ratio, for those of you that are financially inclined, of 0.1 to 1, which means for every R1 that they need to pay to suppliers and short-term creditors, they only have 10 cents on the other side. And they fund the shortage with more loans. And the more you borrow, the bigger the pressures on your interest rate and so forth. So risk averse is a good thing in terms of public perception, clean audit reports, low fraud and corruption, of course, and that's wonderful. But it doesn't get you over the line in terms of service delivery, broadening your base of taxpayers, broadening your base of property owners so that you can increase your revenue. On the opposite side is risk aggressive. And I think Steinhoff was risk aggressive. And if we read the story about Tongard Hewlett, they were risk aggressive. And they were taking too many risks. I'll come to that graph just now, sorry. They were too aggressive. And when they took those big risks, they did not have the checks and balances in place. So I want to motivate the team. It's not my decision, it's your decision. I want you to remember this slider. And I want you to remember that if you are risk averse, it's going to be difficult to achieve some of the goals that you are setting out. And therefore, we will need to take some risk. But if we take risk, we need to understand this portion of the business. And if I can get this across, I think we've already achieved something wonderful today. There's not one single public entity or public sector unit or associated businesses like yourself that has got this right yet in South Africa. But this comes from COSO 2018. And COSO has put all the key elements of risk management onto that little picture that you see on the screen. And I think if you take nothing away from today, and this, I can leave this in your mind, I think then I've achieved a lot today. That blue line, that curve that incrementally increases from left to right, that is the balance between your performance and your risk. So risk is the vertical axis and performance is your horizontal axis. So in theory, if you don't do anything on the left-hand side, on the left-hand bottom corner, then you also don't take a risk. If you don't want to be killed in a car accident, don't leave your house. You know, that type of thing. But the more you start to travel, you know, the more you get into your car, the higher the risk is that you might get in a car accident. I want to use Eskom as an example, so let me just go through the principles first. Now, the biggest challenge that we have in most institutions that I work with is we have a risk assessment that is managed by one person, and then we have a performance management system on the other side that is managed by another individual, and that those two absolutely never get together to compare KPIs, key performance indicators, to KRIs, key risk indicators. So those two things need to be aligned. And as you push for performance, as you push for achievements, as you push for increased production, or you push for anything that we really want to increase performance, at the same time, the moment you put pressure on performance, what this graph is telling us, there's an acceleration of risk. If you look at that blue line, you can see that it's increasing incrementally. It's almost like compound interest. You know, you earn interest on interest. What you see with risk is that the harder you push on performance, the higher your targets, there's an incremental increase in terms of risk. All right. The second one that is really important, which we will not get to today because it needs more analysis and understanding, is the red line. That red line is called your risk appetite. And what risk appetite says, what it brings to the table is I want to push performance. We really need to accelerate performance. In our country, we need to get the GDP going. The farmers have taken a lot of risk in terms of increased production over the next 3 and 4 years by planting a lot of things and so forth. But what we need to do is there's a line that if we keep on pushing performance above that line, where the risk is accelerating, and in a country where the political will and the failed state and all those sort of things are relevant now, we cannot rely on the government. We cannot rely on the government to back us up when we really need that. So we as a community need to make sure that we push performance, we really push it hard, but at the same time that we always measure our performance against our risk appetite. When are we getting nervous? When do we need to back down? When do we need to make sure that we have this risk control within our control, that the parameters are in place and that we can measure? And just by looking at that graph, you can already see that to get your risk assessment approach there, it's going to take some time and some fine-tuning. There is a green line, and that green line is called your risk capacity. Once you go above the green line, that's when you get failure. SAA, Eskom. And without negative reference to Brian Molefe, I'm not trying to discredit him here, but just to use it as an example. Brian Molefe became the CEO of Eskom, and he had a political mandate to generate power at all cost. You will not switch off. There will not be power outages. The economy needs power. And what he did is he was pushing performance. He was really working the generators and the capacities as hard as he could to get us away from power outages. But Brian did not know where the red and the green line was. He didn't have that quantified. So initially he went past the red line, and then we had a little bit of power outages, and the government says, here's the mandate, push the power, we want more power. And then eventually he went above the green line. And now that he's operating above the green line, what we find is stage 4, 5, and 6 power outages. And now with Andre de Ruyter, once again, without talking about the individual, just positioning, and now what Andre de Ruyter needs to do is he needs to get Eskom back below the red line. And to do that, he needs to put level 6 in place, because he needs to replace, refurnish, maintain all this infrastructure that is built so that he can get a reliable performance in the future. And that is why we have power outages. He's trying to operate below that red line. So in Agri SA, with all your interventions, with all these big targets that you have, we don't want to go where Brian was. We don't want to go above the red line. And the moment we cross the red line, we want to know that. Whether it's in terms of capital infrastructure, whether it's about transport or the effectiveness of Transnet, the moment that Transnet as an organization is going above the red line, then it starts influencing our business as well. And we don't want it to get there. The red line informs us when we need to intervene and when it's becoming really, really critical. All right. Now the purple line, the vertical purple line, that's your target performance. That's your KPI. If you have your strategic plan, you set down your KPI, and that is what people are trying to achieve. When you measure performance, you measure people against that purple line. The dotted lines is the variation in performance. So sometimes we underperform and sometimes we overperform. But the variation is what is keeping the board happy. So the board says we cannot give you exact performance targets. Why? Because we work in a country that is dynamic, and politicians and personalities and all these sort of things that are influencing everything we do today. So here's our target, but we're going to give you a little bit of space. And as long as you stay within that space, we are happy. And that is where you can take risk. So when you take risk, make sure that whenever you take risk and the risk is increasing, that you stay between the dotted lines. Okay. At least we want you to achieve the purple line, but stay between the dotted lines. That gives people the authority or the mandate to make decisions, as long as we know that they are operating between those lines. Okay, so I think this is an important graph. We want to compare performance against risk. You guys are going through, as an organization, you are going through a dynamic next 5 years. Everything is telling us that you will become an even bigger GDP driver. You will generate foreign currency. Your trade export, your trade excess or the surplus will increase incrementally. And as those things are increasing, the risks are really hampering us. Poor infrastructure, politicians, technology, Russian-Ukrainian war, and so forth. And therefore, we need a dynamic system of measuring all these performances in our industry against those risks. Is this achievable in 1 year? I don't think so. To do this, you need put your building blocks in place and so forth. To calculate risk appetite is not easy. Risk appetite cannot be done like we are doing it now. We need to look at your different processes and sit down and work with those risk appetites over time. Okay, and then eventually, Chair, I'm finishing my lecture now, so then just to bring everybody into place. As a board of directors, you really need the first, second, and third line to come on board. So they need to develop together. Your first line needs to understand that they are the risk assessors, they are the process managers, they are responsible to do the job. The second line of defense must understand that they need to inform you on a regular basis, specifically in terms of that graph. So the second line of defense is the information system that will tell you where's your performance and where's your risk in terms of your risk appetite. And it will tell you if you are within those dotted lines. That's the job of risk management. That's where they need to end. And of course, the third line of defense is that independent assurance. So if we think about Steinhoff or Tongaat Hewlett is maybe a better example because it's in your industry. The sugarcane farmers, I mean, these guys are in desperate trouble. Tongaat Hewlett is on the brink of disaster, the brink of business rescue, and we hope that will be sorted out. But the impact that that's going to have on the industry is I don't want to even think about it. But what I ask myself is, in this big scheme of things, when all these things happened, where was the risk management? What did risk management do in that industry or in Tongaat Hewlett? How did it happen that Peter Stouder overstated the assets by 3.5 billion and the board of directors were never informed? And then one step further, when all these things went wrong, and when we stopped paying our suppliers, and when budgets were misspent, and when contracts were issued for all sorts of things, what happened with the internal audit? Well, where was internal audit? Why didn't they pick up on these big things? And as an organization, what you want to do is you want to see the three lines of defense, 1, 2, and 3. I just want to see there's something in the chat box. Well, sorry, it's not for me. All right. So Chair, in a big scheme of things, that is, I think, where we want to take risk management, and where you would like to take it. Is it possible now? It's all about maturity. It's about getting the risks populated, and I think today is that part of the exercise, that we look at those risks and so forth, and we work through them. I don't know if there's any comments, maybe just for the moment, Andrea.
Yeah, if there's any comments, you can put it in the chat box, or you can just raise your hands if you have any questions for clarity on the previous presentation. Alternatively, Deon, you can then carry on. Seems like there's no questions. Thanks.
Okay. Dankie. Even kyk, waar is die volgende ene?
We've got here a question from Kathy. You can proceed.
Thank you. Thanks, Deon. So my question is, when you speak about those lines, and you showed us that graph with those lines, how do you ensure that a person remains within those lines? Because so often when things go wrong, you can see that with Tongaat Hulett, it was the fact that people were obviously allowed to behave outside those lines, and but within the context of an organization, how do you keep your eyes on the performance within those lines? Thank you.
I think that is a absolutely critical question, and for that's where technology comes in. If we do performance management on a manual basis, where we have a quarterly dial in and we look at targets and did we achieve our targets and so forth, then we are often surprised when things go wrong, because in the last quarter everything was in place, and those were the targets, and then suddenly those things start falling apart. I think in Eskom's case, everybody predicted that we will be in this position 10 years down the line. And maybe the same signs were out there for Transnet. But we should have prevented that. And how you would have prevented this, we should have seen the signs early. And we should have had those parameters. And when the parameters were in place, the moment we started moving outside those parameters, then we would have taken action. We did not have those parameters. And the president can say, I think, anything he likes. I think he's in a desperate position where they actually don't know where to go. We've run out of time, we've run out of investment, we don't have the capital, and now we need to go to the private sector, and there's a reluctance to approve all the legislation to make this possible, and the private sector can move really fast, and the moment that we talk about all these alternatives, the first thing that raises its head is the kickbacks for the new transactions, and everything is delayed because everybody is trying to cut the deal and so forth. So the trick to keep people within those lines is continuous monitoring, and continuous monitoring can only happen through technology. And that is where and it's also in your annual report. I think you've already stated in your annual report, you've already stated that technology is relevant to your business. The World Economic Forum talks about artificial intelligence, and I mean that's down the line somewhere, but we need to get there. And we need to talk about big data, and you need to analyze that big data. And the moment you make decisions, you need to analyze and data mine that big data to see if you are still within your parameters. A continuous measurement of that. And I think if you look at everything that goes wrong in the state, it's almost like we are surprised every time it happens. When something goes wrong, we say, what happened here? Or when we looked at COVID, I mean, everybody expected there will be fraud and corruption during COVID. But we started handing out money without having any system in place to see that the money is spent on the right purposes. And then when we get to the end, we hear the horrific stories about fraud and corruption, and politicians gaining massive contracts and people paying salaries into their own pockets and so forth. The system should have picked it up as and when we were going, and we don't have those systems. So technology is that driver, unfortunately, and it comes with money, and it comes with further investment and so forth. I hope that answers your question.
Thanks, Deon. Is there any other questions that you would like to ask? Doesn't seem like it. Yeah. Thanks.
Andrea, shall we take a 5-minute comfort break?
We can. In 5 minutes is perfect.
Yeah.
Thanks.
That's good.
Thank you. All right.
Please also feel free to be interactive in the next session. We will now move to the confirmation of strategic objectives and key performance indicators, as well as the identification of strategic risks. And this will allow us to have an interactive session with each other going forward. So Deon, I'm going to give the floor back to you. So if you can just proceed. Thank you.
Okay. Thank you, Andrea. There is a chat that Jack raised the question, and I think, Jack, it's I apologize. I did not recognize all the protocols earlier. So I'm not 100% sure who everybody is, but Jack, if I may call you on your name. You know, the Auditor General report, if I'm trying to build a constructive confidence in some of the elements that Cyril Ramaphosa has put on the table. And I agree with you. I agree that Auditor General reports are totally ignored. But whilst we are lacking strong risk management, and whilst we are lacking effective internal audit, because one of our biggest issues in government is the fact that internal audit is making no difference. Internal audit is, you know, it's in the organization. It's working there where things go wrong every single day. They understand the pressure points in the organization. But what they do is they keep on auditing compliance and licking and ticking, and it brings no value. So whilst we have a failing risk management and a failing internal audit process within government, the one report that has stood the test of time is actually the Auditor General's report. So there's some reliance on that. I think Cyril Ramaphosa realized that the Auditor General report is not making a difference. And that is why early in his term, he started changing the mandate of the external auditors, or the Auditor General. And he gave them that prosecuting authority. So before that, the Auditor General had to go to, let's say, a municipal manager or an accounting officer in a provincial or national department, and he had to inform them that they picked up some irregularities, and that the suggestion is that the accounting officer got that investigated, which in 95% of the cases never happened. Sometimes the top officials are involved, and sometimes they are reluctant to take action. There's no political will to take, or no will to take action, and so forth. And then Cyril Ramaphosa, early in his term, changed those mandates of the AG. The AG now does not have to inform. They can go in and they have forensic audit rights. They can confiscate, they can investigate, they can open a case with SAPS, and they can even prosecute. They can testify in court. And I know when you and I look at this, we see, well, it's now 4 years. I mean, this is Cyril's second term, the president's second term. But I can, from my side, tracking these things, there is a significant number of people that are prosecuted out of AG reports. And the one statistic I know, 4,814 government officials have been charged with doing business with the state, and their assets will be attached and they will be dismissed. That is one of the big things. The second thing that I believe, Jack, that is important is that we need to just, you know, these things in government, the wheel in government is like the Titanic. It's not easy to turn, and it's going to take a little bit of time. The Auditor General had to capacitate their staff to become forensic auditors, because the evidence trail is a little bit different. And 3 years later, I think they make a big difference. There are municipal managers that were replaced because of Auditor General reports. So it's not perfect. I think I agree with you, but I think the perception that they have no teeth is no longer true. It changed recently, and I really, as a chartered accountant, I hope I can. Next time I speak to you guys, I can give you even more examples. Jack then went forward. He says, in my opinion, the biggest governance leadership risk is that we need to address is the state's bloated, top-heavy bureaucracy at all three levels of governance. Okay, so there's two things there, Jack, and once again, it's valuable because it's part of this risk discussion. The president has been charged with, they went to court and in terms of the Poppy Act, and they asked the president to release all the records for the time when he was in that specific body of cadre deployment and so forth. So I think something will probably come out of that. We are sitting with government, all three levels, that is top heavy. And I can give you one example with that. Even here in the city of Cape Town, and I brag a lot about the good things that they are doing, but there's one business unit in the city of Cape Town where they recently asked me to analyze the difference between the performance they had 20 years ago and the performance that they have now. Have they significantly improved? And the outputs that they deliver, and in terms of water management, the outputs have not changed a lot. So the volume of the task is fairly consistent over time. But what happened was, 20 years ago, they had 17 people doing that job, that specific function, of which 2 people had the title of director and assistant director. Today, they have 39 people doing that job, of which 21 has the title of director or assistant director or deputy director. So they are really, really top heavy. To change that, we will need to have a political will to change that. I think this cadre deployment was an opportunity to get people into the businesses, to develop a middle class, to develop a, that sort of thing. And we're sitting with a lot of young people, dynamic young people that's coming out of university and they don't find jobs. I don't have any stronger comment that I can make on that. All right, back to, please ask more questions and I'll try to answer them. Chair and Andrea, for you, thank you for your inputs as well, and that we that we got to this risk register. So what I've done is, you did publish a risk register in 2020, and then I had the opportunity to work through your annual report that was published in 2021 and 2022, where most of you people have given inputs and you've written certain sections of that. And I had an opportunity to work through those 160 odd pages to see what your targets are, what the influences you had at the time, where your successes were, and the challenges that you see forward. So I tried to bring all of those things into this risk register. What is important to note is that I'm not in your industry. I'm not an agricultural specialist, so there might be things that you disagree with me, and this is exactly why we have this meeting. So I'm not sensitive, so if you think I got it wrong, please tell me. The second thing that I've done is I've taken this specific risk register, and when I looked at the risk register, I grouped the risks in certain categories. So I'm just going to quickly go through them. What are the external risks, and what is the importance of an external risk? It is something that you can probably not influence. It is there, it affects you, like the Russian and Ukrainian war, and it has a massive impact in terms of your input costs and so forth, but there's very little that we can do about it unless we get intervention from the politicians and so forth. So I've listed some external risks. Then I went through some political risks, and I've identified those political risks, very consistent with what you have previously. I looked at environmental risks, and I've identified there's actually quite a lot of them. And those sort of risks, I've populated them first, because those are the risks that are that we are facing that we cannot directly influence. Then I looked at governance risks, the challenges that are coming your way in terms of all sorts of things. I've populated them. And then I looked at the economic risks, which is, I've separated economic from finance. When I looked at economic risks, I've looked at growth and capital constraints and inflation and so forth. And then eventually I looked at financial risks, and these financial risks is the financial risks that I think you are facing. It doesn't mean it will materialize, but it is risks that we need to measure on a consistent basis. There's some legal and compliance risks. And then lastly, the social risks that were very big in your previous risk register. You had a lot of social risks. I've toned them down a little bit and grouped them together. I brought to the table technology risks, and I've listed some of them, and I've also separated the human resource risks. So there are 56 of them. So let's start off by just saying that 56 are too many. Now, I acknowledge that, but I said to Andrea yesterday, that it is not my job to eliminate risks. If you think those risks are not relevant, then we can take them out because you know the business better. So I think I've got too many of them. And as an organization, you probably do not have the capacity to manage all these risks in terms of just time and money and so forth. The second thing that is important about the risk register is that you'll see that in the third column, the column with the colors, at the top there's a heading that talks about IRR. And I just need to explain that. So IRR means it's your inherent risk rating. I stands for inherent. And inherent means this is a risk that you are facing, but it does not evaluate how well you are managing it. This is just the pure nature of the risk. So in any risk management model, there are 2 risk assessments. The one risk is the pure nature. What is this risk? And if it materializes, how will it impact on my business? The second last column talks about likelihood, and likelihood is simple definition. what is the chance of this thing actually happening? What is the possibility that this will happen? Likelihood. And then impact, if it happens, what will be the consequence to your business? So in terms of likelihood, and if you guys know this, I really apologize, but just to bring everybody on board. So likelihood is determined by count. As we need to, how many times are things going wrong? The regularity of failure, that informs likelihood. And you can see with the question I had earlier, the question was, how do we keep on making sure we are within these limits and within the parameters? Our systems will need to count on the one side our successes and on the other side our failures. And how does it? What is a good example is if you go to the ATM and you use a wrong PIN number the first time, it picks up a wrong PIN number. It gives you a second opportunity, a wrong PIN number. If you do it a third time, it locks your account. How does it know to lock your account? It is counting. It says number 1, number 2, number 3, something kicks in. So likelihood is informed by count on a simplistic basis, and impact is then what is the consequence. Christo, what is also important, maybe not right now, but there are more than one impact. So the one impact we all think about is normally financial, because of the financial pressures, the cost of input costs of produce, and so forth and so forth. So financial impact is definitely one impact, but we must also remember that service delivery impact, specifically in the government, is a big thing. Is that if a lot of things go wrong, eventually services will not be delivered. And then there's also the potential of legal impact. Legal impact is when when things go wrong and people start suing us, and there's a legal consequence and so forth. There's other stuff as well, like reputational impact, but I think for the moment is, I've grouped impact together. Next thing, you can see on the right-hand side, the top risk under likelihood, it's got a 10 factor. Normally, I would rate risks from 1 to 5, where a likelihood of 1 means that it will probably not happen, or the chances of it happening is very low, and where a likelihood of 5 would have said it's definitely going to happen. So in your previous risk assessment, you used the scale of 1 to 10, and I decided not to deviate from that for the moment. So 1 would be chances are very small, and a rating of 10 says it's almost guaranteed this is going to go wrong. This is definitely going to go wrong. On the impact side, an impact of 1 says it's insignificant. We don't need to worry about it. It doesn't need our attention, and we can probably take the risk if the impact is extremely small. Impact of 10 means catastrophic. It is really, the influence is disastrous, and it pushes us, in terms of that graph that I showed you earlier, it pushes us to that point where we go above risk appetite and risk capacity. It's an extremely important point to understand, is that this impact is if you remember the graph I showed you with the blue line, this impact talks to the left-hand side of that graph, the risk. And the higher the impact, that acceleration of the impact when we push performance and when things go wrong is what is indicated in this column. There's a question. Okay, Deirdre, I saw your comment about the AG there as well. I agree with you. Auditors are being shot on a continuous basis. I just want to, I really believe the powers that Ramaphosa gave the Auditor General is making a difference, and it's becoming visible by the day. And if you read a little bit on News 24 and so forth, you will see there are successes. Is it enough? No, it's not. They should accelerate. There should be far more successes. There should be far more consequences. I agree with you. It's just this challenge that for the president to make big decisions, he needs to surround him with people that has the same ethical and transparency around their leadership and so forth. And it's struggling to get that done. Took a long time to get the move aside clause through, and to get rid of some people that are doing a lot of damage. He's just, he's probably going to replace the deputy president soon. So there's things that are happening, but in government it's not happening fast. That's about the best I can say. But I honestly, in my deepest part of my body, I believe we've turned. And if we can just push now, I believe the turn is there. And I'm not overly optimistic. I just see the change. All right. So back to the system. Sorry? Was there a question?
Yeah. Sorry, can you hear me?
I can hear you.
Listen, I just have a couple of things to add. I think in South Africa today, so I've been involved with Agri SA for 8 years. I understand it quite well and, understand the vision and purpose. So a risk rating is supposed to drive the strategic mandate of Agri SA, because one of its main tasks is to protect the rights of farmers in the agriculture value chain. And so risks with very high impacts and very high probabilities, we know stuff like ESCOM, the infrastructure, demise, the crime levels, etc. These are all real risks that are beyond assessment. We know these risks exist. Just in my opinion, having worked with government and kind of, my recent exposure to government is almost that government's contribution to minimize those risks is, let's say, maybe a 1 out of 10. They create more risks by trying to minimize them as what they actually do by just leaving them alone, to be honest. So increasingly, people are looking to the public sector for advice and solutions. I think South Africans generally are looking for solutions, and farmers in the agriculture value chain are looking for solutions. So some of the successes that Agri SA has had in a, let's say, PR/legal perspective was stuff like expropriation without compensation that was untabled. From a constitutional perspective, shale gas exploration, the droughts and the floods, which were, constantly that they're mitigating through that process, that we are mitigating through that process. So I'm really interested in thinking about how do we in South Africa as Agri SA, with our mandate and our influence and our brand and our people, actually focus on, because a lot of these risks are very broad,
Sorry,
Yes.
can you just speak clearly into the mic? It's a little bit distorting on your side. Thank you.
Let's try this. Is this better?
Yes, colleagues, you just have to say.
Not completely, but a little bit. Okay, let me try. So the problem is, how do we have to mitigate these risks focused? Let's say ESCOM is currently our country's biggest risk, because it is. There will be no economic growth without in the grid. What can Agri SA physically do? Where does it need to focus to pull a lever to change the game for the country? Because it's for South African agriculture, but it's broader. So we do a lot of press releases, we engage with a lot of parties. I mean, there's no lack in activity. But how do we actually penetrate that problem and actually change the outcome? I think that is something that I would be interested in hearing from you as we go through the session. Thank you.
Yeah, shall I start with an answer? Because I think that is an absolutely valid point, is that, in external risks, there's not a lot you can do about it. But if I can just start my angle, or the angle that I think we need to explore, is that bar, that line that I showed you, where you are risk averse on the other side and the risk aggressive on the other side. I think if we want to make a difference, and I did see in your annual report that you are, a lot of the participants or the writers in the annual report said, you know what, we should not expect the private sector to do the things that the public sector is paid to do. They already get taxes and they've got a specific mandate and it's not our place to step in and do their job for them. And I mean that's logical to me as well. The thing is, I think somewhere on that bar, you will need to, in my opinion, you will need to start revisiting your risk management strategy. Because at the moment, when the government is doing it, they're creating a lot of risk for you, but they're not bringing that value that you urgently need. In fact, it's in many other cases, is becoming so desperate. If you look at what's happening with Transnet now, and I'm just thinking more trucks on the road, and there's more potholes on the road, and there's and all these things, So I wonder if the solution for Agri SA is not to revisit your thinking about some of these risks and the tool that you use for intervention. It appears to me you are extremely effective when you negotiate with government. When the Johannesburg market is, no electricity or whatever, and you intervene, and some of you did it over weekends and so forth, there's a massive impact that you make, but the impact is on a occasional basis, in the sense that things go wrong and you react to it and you get it fixed, and you've got a good brand and a good a trust relationship with a lot of organizations. But it's not changing the roadmap, because next week the same thing will happen and you need to intervene, and it's almost like you are just fixing things as they happen. So maybe we need to find a strategy where we start looking at taking some risk, and to do that you need more money. And I understand that we give a lot of money to the public sector, and they've got a mandate and they've got a responsibility to do. Will they become more effective in the next 5 years? I don't know. But in the next 2 years, what we do know is that your quantity of produce is going to accelerate by another 20 to 30%. And you need to get that products out there. And if we wait for the government, it's not going to happen. So I'm not sure, I'm not a specialist in your industry, but I wonder if it's not a time and a place to start. I like that one sentence that somebody wrote. At the moment, what you are doing is you are reacting, you are defending, you are intervening, but maybe being a defense organization or a spokesperson, maybe that role is not aggressive enough to make the big changes for the moment. And please bear with me when I say this. I'm not a specialist in your area, and you can easily criticize me for that. But I have the sense that we need to find a new way, a new risk management strategy.
Yeah, just a last point from my side. I think what's important is let's take Eskom and infrastructure. Let's say it remains the same for the next 10 years. What will be the impact? And I can tell you now, the impact is absolutely catastrophic. We might end up in a spoon situation if it continues like that, with food price inflation, in the double digits, etc., etc. So my 2 cents is just that if we don't have strategic levers that we pull that could change the outcome, we will all be down.
Yeah, that's a strong point. Is there anybody else that want to contribute?
Yuan?
Thanks. Yeah, just from my experience, so from the abalone, call it the aquaculture side, and we're dealing with DFFE and not with Dallard, but I'm originally from the fruit industry and have dealt with Dallard. I think what we got to do is it's actually easy to identify the risks and to categorize them. I think we need to say to ourselves, there are legal avenues that you want to follow when you hit the brick wall with government. But I think the attitude must be this: is identify where the public-private partnerships are possible. Identify the individuals that are willing to make this country a better place. And I'm not giving a political speech, and I'm not even emotional about it anymore, because I'm a very practical guy. But I think it's very important that we identify early where are public-private enterprise possibilities and who are the individuals in the public space that you can deal with, and start those relationships. I can tell you what, there's no other ways that it's going to work. There's a greater there's an opportunity for the private sector to engage, because there's an appetite in the public space where they know they've hit the end of the road, and they're not going to stand on a hilltop and cry for help because it's politically incorrect. but there are individuals, and that's been my experience with the DFFE specifically, that there are individuals that are as desperate as the farmers to make a change. And, you know, I mean, the electricity, the road infrastructure, it goes on and on and on. And we only have the next 10 years, I would say, to identify those opportunities, identify those individuals, and make that positive contribution. You know, your last resort is legal, and I think there are still going to be legal challenges, because the system is still flushing out the cadres, the corrupt politicians who simply just don't see what they're doing. But we have to remain positive in our approach, and yeah, I believe Deon mentioned earlier that we've turned the tide with the Auditor General of the powers that he's been given, and we need to support that. So yeah, just my 2 cents. Thanks.
Yeah. Can I ask, because, you know, I mean, when we look at the risks, you know, and you've already mentioned the critical risks, and there's some more that are coming now from 2020 onwards. Do you think, and let me pose this question from the solution side, as a group of people that are in this industry, if I look at your strong points, is you have incremental growth, you are becoming a bigger role player in terms of the portion of the GDP that you generate. You've set yourselves up for even more growth in the short term, or medium term, maybe the next 2 years. And then when you talk about return on investment, you're a very attractive place where people would like to put their money. And if you look at our country and you look at investments and a lot of people pulling out, people are looking for return on investments, and people are looking at some. So is this the fact that you've got all the building blocks of a successful business, doesn't that give opportunity to actually privatize, and that's the wrong word, but privatize some of your initiatives, get PPPs going, get people to invest? And I know we go to all the big ones always, you know, we go to the insurance companies and the banks and the pension funds maybe to invest. But maybe there's also a bigger market, and the bigger market is maybe lying in the bond market, where if we want growth and we want whatever, that we start looking at a bond issue where the big players can invest, but a guy like myself can spend, and I might not have 100 million, but maybe I can put $1 million in, and I can buy a bond, and I get a good return on that investment. And that way we start a financing mechanism that can make some of these things possible. Of course, it's easier with the big players, but I think everybody is pushing the big players for investments and so forth. But you have a product that has all the good signs of growth and return of investment. And maybe the comments that were just made about, you know, find those PPPs is also, you know, sit down and identify the financing mechanisms. And that will make Agri SA, it will change the way that you structure yourselves, because you will need to get some of those individuals on board that are really specialists, let's say, for example, in the bond market or whatever. And then a second comment that I just want to put out there, and I'm not for one moment comparing the two institutions at all. And I'm not even thinking there's a correlation between what you do. But I had access to information on AfriForum. And forget what their mandate is, but what they have done is they have created an immensely successful financial income stream. Let's call it an annuity income stream, by getting people to invest a monthly amount without any return. A monthly amount, whether it's 100 Rand or 500 Rand or 1,000 Rand, and they've created a cash flow or an investment size quantity of cash that they can then utilize to achieve some of these goals. And that cash flow is generated every single month on an annuity basis. So maybe there's some ideas on that side that we can say, but Agri SA, you have a good story. You've got a legal thing that you are fighting for, a legitimate thing that you are fighting for, that brings value, food security, all sorts of things. And if we need to sort out roads, and we need to find ways to do it, there are ways to take that services away from the municipalities. You know, a lot of instances that already happened. But to take those responsibilities away from municipalities and start doing it ourselves, we need to generate a cash flow stream that can do that. And maybe there's a correlation with what other institutions are doing that we can bring to the table here, that will allow the suggestions of PPPs strong individuals and proactive private sector involvement that will allow that to happen. I'm just putting that as a point.
Thank you.
Christo?
Christo.
Yeah, I think we sort of move in the direction that we need to move in. But for us, it's important that we understand exactly what we are dealing with. That's the purpose of today's exercise, because yes, there's political risk, there's economic risk, there's also environmental risk, but more so there's also survival risk for institutions such as Agri SA. And I think there's a massive, massive opportunity for the organization, because in the midst of all of this chaos and uncertainty and conflict, it's strong institutions that are going to ensure that people stay together and people stay on course. And as an institution that operates within the agriculture sector, that is Agri SA's primary responsibility. The big difference between Agri SA and its affiliates, remember, Agri SA is an organization of organizations, and farmers are sort of indirectly linked to Agri SA. But the big difference between Agri SA and all of the organizations that are affiliated to it is that your provincial organizations, they focus on your provincial policy environment. Your commodity organizations focus on commodity-specific issues. For example, Grain SA will focus on research in that space, exports, all kinds of regulatory measures that impact on the grain industry, also the empowerment of grain farmers, and also ensuring that the grain industry remains competitive. And then you've got your corporates, input corporates, technology corporates, also financing corporates, and even retail corporates that are filling up the entire value chain. So what is the role of Agri SA? Its role is a quasi-political role, not a party political role, but its role is to ensure that we influence policy and that we, through that influencing, that advocacy, that facilitation role, that we fulfill, that we create a conducive environment for agricultural growth. Now, if you look at the past 3 years, we've seen tremendous growth in the sector, and you're right. Yes, and Agri SA, together with all of its affiliates, played a major role in that growth, especially your commodity organizations, because they drove the expansion of international markets and so forth and so forth. And I think if we become much more proactive in our approach as Agri SA, then we will certainly help to even mitigate the risk that we face even more effectively. Now, the big thing is, what do we mean by proactive? We understand very clearly what does a reactive approach entail. We wait for government to sort of legislate a law, or there's a bill that's on the table, and we all sort of react, to that bill, and we write submissions, we go to Parliament, and we present in Parliament, etc. Now that's very good, but is that enough? As you rightly say, if we really want to position Agri SA as an organization that is proactive and that will secure the future growth of the agriculture sector, then we need to look at mechanisms such as a financing mechanism, such as a logistics mechanism, even cash flow mechanism. We also need to look at marketing mechanisms. Just to cite an example, yesterday morning, we had the DTI office from Japan engaging with our various commodity organizations and explaining to them what are the constraints in terms of trade. One of the big issues is the fact that South Africa doesn't have direct flights to Japan anymore. So stuff have to go via the Emirates to get to, and then there's other logistical factors that impact on exports to Japan. But in addition to that, we've seen how the outbreak of foot and mouth disease sort of scared the Japanese, and they have particular restrictions on certain exports. But there's a bureaucratic nightmare or red tape that's in place which limited or limits the products that we want to that needs to be assessed for exports to Japan to one per session. So I think let us get a good understanding and good grasp in terms of the work that you've done already. And if you can guide us even further in terms of, right, this is how this risk space looks like, right? Then I think there's then an opportunity for Agri SA with it's more than 100 organizations, then to come together and say, listen, let us think of a strategy that will put us on a path where we can use our collective synergy to achieve these goals that we want to achieve and the things that you've mentioned at this point in time. The big difference between an Agri SA and AfriForum is, obviously, AfriForum is a civil rights organizations with individuals as members. And that gives a unique character to the AfriForums of the world. Agri SA, in return, is an organization of organizations. But each organization that's the member of Agri SA has the capacity and has the leverage to unlock a value proposition. Soos in Afrikaans sê, wat skrik vir niks. But we haven't really tapped into it because we lack the understanding of how to bring all of these organizations together to be more effective in their approach and at the end of the day achieve collective unlock a collective value proposition for the entire agriculture sector. But this in itself poses a massive opportunity. The danger obviously is if we undermine that collective spirit that is currently there, and we fragment Agri SA to the extent that it no longer holds the authority as an apex organization to keep these organizations together, then we might as well close the doors. But then we've missed the golden opportunity. Thanks, Deon.
Okay. Anybody else? I think there were other comments as well before I...
Deon, yes, I'm going to give Alwyn a chance, and then I see Tuli, your hand was raised and it was taken down, and I think then you can respond and then you can start to going through the risk register. Thank you.
Thank you.
Andrea and Deon, just a quick one from my side. On your earlier comment as to why we don't press harder, I think Christo's done an excellent job of outlining, firstly, the organizational limits of where we are and what we do. But I think also what mustn't be forgotten out of this whole picture is the fact that we sit in a very tenuous balancing act. Years ago, I was involved in a small private equity fund in Zimbabwe, and I saw in action what it looks like when things properly derail and a country becomes a complete failed state. And your difficulty there, Harry, and a lot of people will tell you, and I think Pierre Foucault often made the point of it during his tenure as well. The white Zimbabwean farmers ended up in the problems that they have because they elected to get involved in the politics. And I think it was a lesson that was learned very dearly. Things might have developed differently, ultimately might have ended up at the same place, but things might have developed differently had that choice not been made. So I think organized agriculture is very, very careful not to cross that line. And Jaco made a statement the other day in a meeting again. We are not involved in politics, and we cannot get involved in politics. The difficulty is the thing that Marx said, unfortunately, is true, that the economic struggle is a political struggle. So your line that you need to follow and the extent to which we can go in putting forward and exercising influence is a very, very fine line. It's an extremely fine line. And I think the organization has been very careful not to cross that line. And follow an approach of rather cooperating and influencing rather than opposing and challenging. And I think from a risk perspective, that's just important to bear in mind as well.
No, I think it's a strong point. And you know, once again, I mean, you have that direct experience and the role that you play. I wonder, in maybe a short response on that is, I wonder if some of these components of government that is failing us, if they will not be relieved if they find economic or you know solutions to some of these problems. For example, I visited the R a short while back, and there's two ways that you get to the R from the Victoria way, from the Bridgetown side. You can go on the right, you know, towards the right, or you can go towards the left and into the R. So I don't know how I ended on the left-hand side of the road, but I think there's 1,000 potholes in the last 8 kilometers. And I had a long session with the internal auditors of Pixley Kaseme municipality, and I asked them that, you know, how do you end with 1,000 potholes? What happens that you get from 10 to 200 and then eventually to 1,000? Because that road needs to be redone now and so forth. And first, the human resource capacity and skills is not there, but they just don't have the budget, because the credit control of that whole district, you know, those 8 municipalities are extremely bad. And because they don't utilize their capital grants, their conditional grants well, you know, they've started losing access to that as well. So they're now in a desperate position. And what also fascinated me is that the little train station in the R, which I believe people tell me was a little business hub a couple of years back. I mean, the grass and the rubbish that's lying there, and there's no little shops anymore. And I didn't see one train going through there and so forth. So I think with that infrastructure, that is where the R is now. I don't think that the R, Pixley Kaseme municipality, or the municipality of that area specifically, can change that anymore. They just do not have. And therefore, I think there's also, you know, there's also the economic power. I get the politician one. I think you are extremely right there, and you shouldn't aggressively oppose, because that will take you to another place. But I think economically we can start making contributions, as long as when we make those contributions, that we maintain ownership of those contributions. Because the moment that you do something, you give it back to the state, then we go back to the norm, and we know what that norm is. You know, so my idea, or the thing that I put on the table, is the fact that out of these risks that we have, let's just think that one thing is, how can we create value, and how can we make a difference? And what I'm not sure, and I think Christo pointed that out to me now, is he says, Deon, just make sure that you understand our role. You know, and if we understand that role, there might be potential and so forth. But how do we interact economically without getting the politicians annoyed, so that we start changing our destiny, and that we set ourselves up for this wonderful asset that you build. That you actually get this thing to mature and bring the value and give you power as a role player on the political field, because you created your own destiny. Dis die ding wat ek sukkel, but I mean, the points that you've made is valid. My comment on that. There's other comments on the chat box. Let me just make sure that I answer all of them. Still risk mitigation plans. Yeah. Kathy, our biggest challenge is whether in cooperating we end up being co-opted by government, and how do we manage that relationship? One example, successful example that I've seen is, and I'm trying to keep it in government so that maybe it reflects back to you, but in the Saldanha area, the municipal manager, Heinrich Mettler, had a very strong vision. Saldanha was declared IDZ, and you know, an industrial development zone. There's a lot of opportunities coming that way, and a lot of unemployment and so forth. So Heinrich Mettler took some initiatives. He's a government official, obviously the municipal manager, and he took some initiatives to do 2 or 3 things that I thought was unique and proactive. The first thing is, he realized that the red tape that involves growth and development and acceleration of the economic activity in his area, Saldanha, that the red tape is just too much, and that it takes the public extensive quantity of hours to get building plans approved, or to get new initiatives or new licenses or whatever they need to get. And then he decided to build an investment center in the middle of Vredenburg. And the investment centers, if you want to go and see the municipality about a new development or new rights or whatever you need, is you don't go and visit 7 people. You go to the investment center, you set up a meeting, and they invite all the role players. All the role players come down to the boardroom, and you see all of them at the same time. And that has taken a lot of the red tape and all the nonsense and the long decision-making periods took that away. And slowly but surely, the public started to trust that system and the fact that decisions are made on a quicker basis. So that's one thing he did. The second thing he did is he realized with the expanding economy that he has, that he really needs to get data to everybody in the area. And he went international contract with some financing from Nokia, I think. And CCOM, he implemented a fiber system within the municipality, initially on a pilot basis, and then he's making it broader and broader over time. And now he has established a PPP where he decided that he will not dig trenches across all the roads and so forth to put the fiber in. He will actually utilize the water pipes in the area and use that as a conduit for fiber. And that will give him income. He will rent or lease the water pipes to the fiber companies, and the fiber companies will make money out of data. So I think, you know, that comes from government, but with that type of thinking, I think he severely influenced a couple of things. He built trust in the area. People are getting access to modern technology and all these automated, digitalized type of things. And the third thing is he enabled his community to grow and so forth. And I think there's a model, and he utilized PPPs for that. So your question is, you know, how do we manage these relationships? In the PPP that they designed in Saldanha, the people that are funding the development of the fiber network, they own all the shares in the beginning, but they signed an agreement that as they are starting generating money out of this, that slowly but surely that asset will eventually be purchased from the investors by government, by the municipality. They will purchase that investment and shares will be transferred according to the percentages that they repay. So it was a very innovative way to say, we don't have the money, we want all this investment, we will put it up front. If the government would like to take this asset back somewhere in the future, it's not going to be a donation. If you want it back, you need to pay for it, because we put money in it and we invest our time and we build a product that is doing that now. I think some of the companies that are suing municipalities for potholes and fixing the potholes are doing the same thing. They are fixing the potholes, they are using their own money, and then they go to court and they recover that cost from the municipalities. You know, that's maybe how we get into it, you know, is that we need to take responsibility to get it fixed, but we don't want to lose those assets in the end, you know, or at least we would like to get the return on investment, if I understand your question correctly.
Deon, just a last question that I'm going to ask Tuli, and then you can start, then we can start with the risk register. So Tuli?
Hi, colleagues. No, I just wanted to actually comment. I think Christy did address something, but one of the things that we had spoken about earlier was 10 years ago, if they'd assessed the ESCOM situation and they had put measures in place, then maybe we would be in a different situation. Yes, maybe things would have gone down differently, but maybe we would be in a better position, even if there was a political mandate. Because I remember there was a discussion regarding nuclear at some point, and there were lobbyists coming in saying, no, this is bad for the planet. There was an international also obligation that South Africa had to denuclearize, and that also was a solution that had been brought forward for the electricity crisis. All right, so if we take it now where Agri SA is, I'm new to the organization as well, but in the time that I've been here, we are lobbying. But if we're lobbying, we are then expecting a response. It has also been an observation that we are more reactory than initiating sort of situations. One of the things that were raised by one of our colleagues was that the last thing that we would want is to seem like we are opposing. Maybe if we don't look at it as an opposition, but rather look at it as a way that we can be self-sufficient, because what happens truly if the state does fail? We've only got 2 more years after Cyril Ramaphosa. What happens? We don't have the answers to that. What if we have another Jacob Zuma dispensation? Will we then still be relying on because one of the risks that was spoken about here is a succession plan in Agri SA, but have we thought about the succession plan in the ANC? What happens really? So maybe if we don't look at it as if taking initiative is somehow robbing the government of power, but using it as a negotiating tool, I think it would even place us in a stronger position. This is just my observation. Again, we do occupy quite a tenuous sort of a place. But what if maybe we need to develop even the way that we are approaching this? But that's just my 2 cents.
You have a challenging mandate and a frustrating one, I would imagine, because you're sitting with this wonderful asset, and in the rest of the world, people will throw money at this problem endlessly because they can see the return, and they can see the value, and they can see the economic growth, and they can see the reduction in poverty, and they can see the reduction in unemployment. And how do you change the role players that they see this wonderful thing that you can bring forward in the next 5 years and get them committed? And I'm frustrated that I don't have the right answer here. And my only answer that and you'll see as we go through the risks now, every now and again, I've put opportunity in brackets, where I think that maybe what we need to think about is when we look at this risk, is that we will not be able to change this risk unless we convert this risk in an opportunity. And unless we take ownership of this and we make it work and we change it in a constructive way where government will find relief in the fact that we are just taking over the responsibility because they do not have the competency to do it. And I don't mean it now as a political statement or whatever, but I see the president's frustration with the Minister of Energy, of Electricity, that he wants to put in his office. I mean, nobody understands why there will be 3 people involved in that same process. But I think he's putting somebody in his office because he needs to have a direct influence right there in his office so that he can start sorting this thing out. Because between the 2 departments, they're not getting Eskom forward. So there's a frustration with the president, the wheel is turning slowly and so forth. And maybe, that's my point. Okay, Andrea indicated, and I agree with that. Let me start with the risk register. I've put it together. I think the idea is today to get to the inherent risk register. There's one question, and let me just deal with that. Inherent risk, somebody asked the question. That is a risk that exists, and we are not measuring how well you are managing it. Eh? So inherent risk it's there. It's the pure nature of your business. So later, the next step, after we've sorted this out, the next step is then to put the key processes that you have in place, which I won't know anything about. I couldn't populate that for you. If we look at a risk, what are the key processes that you've put in place? And all these comments that I heard from Christo and all the gentlemen and the last comment that I got from you, what everybody is saying is, what, we need to look at our risk management strategy. And I think once we agree on the risks that are here, the next step is to say, okay, what are we going to do? And if you do something, there's 5 options to manage a risk. The one is you can leave it with government, transfer it to government and wait and hope and pray. The second option is you can mitigate, which means you need to take, you need to put controls in place to reduce the risk yourself. The third one is to avoid the risk, which we don't really have a choice. These risks are very real in our lives. And the second one is to accept it. You know what? The roads are never going to get better. If they don't get better, it's just going to die, and eventually the whole industry will fail. And obviously, we don't want to take that one. And then there's a 5th option. And the 5th option is, if we don't like the first 4, let's convert this into the opportunity. And that is where that portion of risk management strategy is called take the risk. Yeah? Take the risk. And I hear a lot of things here where you say there's a fine balance, we need to play our role properly, but what portion of that risk can we take? And the solutions are PPPs and find the right individuals. And I hear the things Chris is talking about, a logistics arm and a cash flow arm and a marketing arm. I think those are let's take some risk and let's see how we can influence. Okay, let's go to the risk register. There are 58, too many of them, and we're looking at the inherent risk. So the first one is consistent degradation of key infrastructure. And here, I think everybody already said that. This is the railways, this is the roads, this is the shipping ports, all the handling facilities, and increasing pressure in terms of that. I think that is probably the risk that you are facing that is probably the highest. And the likelihood that this is going to continue, I made that a 10. So it's absolutely sure it's not going to change soon. There's no money in municipalities, and the impact on your industry is disastrous. Maybe in the very short term, you can still cope with that. But, I'm traveling a lot at the moment. Even the roads that starts with N, the N1, the N2, the N3, even those roads are now showing signs of damage and ill repair. So I think that's the first risk. I'm going to go through the external risk, and then I'm going to ask you to make comments. The second one I've put up there was the critical cash flow crisis in Transnet. So Transnet, they published that. They're looking at all sorts of alternatives. They can no longer deal with the copper theft, and you've read it in the newspaper. So there's this big challenge that they have, and I think they've now admitted that they might not be able to deal with this. So they are looking at private sector investments. There's certain money that is flowing around and so forth. And Transnet is probably one of those, if we can get Transnet to work, it's going to alleviate a lot of the problems in terms of potholes and so forth. And I was just thinking, we don't need to make that choice today. But if we look at this crisis in Transnet and we look at the powerful growth of your industry, is there not an opportunity here? There's not an opportunity. We can't take control of Transnet, but now that they are privatizing, now that they are looking for the PPP, we might not be able to put the full value that they require down on the table, but as a significant role player, maybe there's an opportunity for us to get a finger in that pie, however small it is, and so that we can maybe have a representation on that PPP and start making decisions and start driving capital investment and start driving capital repairs and so forth. I think that is something that is number 2 on my side. Price risk, and please tell me if I'm wrong, you know your industry better. I think price risk, if I understand it, is very similar to for example, the gold mining industry. There's very little we can do about the selling price. Because there's international markets and international price mechanisms, and that is very relevant in your industries as well, in some of your industries. And therefore, your big pressure is lying on the input side. If you want to make profit, you need to get your costs lower, and that will broaden the margin, and that is why that price risk is there. And I think I've made it really high, 9 and 9, and the reason for that is the fact that it does have an effect. And I've read your annual report, and almost every single one of you have said that, the oil prices and the fact that we don't get a diesel subsidy and the fact that foreign countries are financed and so forth. So that is driving that risk. Institutional risk and policy uncertainty. I've copied this from last year. And of course, there are big issues. I heard, and sorry that I can't remember all the people's names that made comments. I apologize for that. But the lady that just spoke about the fact that, there are a lot of laws out there, and we need to influence, and we need to play a constructive role. We need to give our inputs. And I think you're doing it exceptionally well, So, but that risk is there simply because we don't get to the end of it. The uncertainty is going over time. And I think we are losing investors because of the fact that we can't just get to this issue. So I've listed all the different laws there. I will, I will finalize it and put it in more language, but I think that's not it. The economic recession, I think there it's the fact that our low GDP growth, that gives us lower rand income. That is one thing. And then we also know the increased foreign currency costs if we start importing foodstuff and that. I think the economic recession why I put it here as a fairly high risk is the fact that the world is going into recession, there's it seems like the United States is putting up interest rates over time. We just had our 3rd or 4th interest rate increase as well. So there is a definite pressure on the economy at the moment, and that might influence your exports and your revenue streams. External, not a lot we can do about it at the moment. The world follows the US. If they put up rates, we put up rates and so forth. The 6th risk was critical liquidity problems in local authorities. Here we are sitting with really incompetence of managerial structures, but my biggest issue is poor credit control, is that there are people that can pay, but we simply do not apply invoice and collection. And if you look at what happened in Tshwane municipality, I mean, Tshwane is one of the biggest municipalities in the country. They have strong collection mechanisms. And suddenly we realized 4 or 5 weeks ago that there are endless companies and state organizations that haven't paid their electricity bills or municipal bills over the last 10 years or the last 6 years, and now they owe 2 and 5 and 8 million. And the moment the municipality decided to send them letters of cutting the electricity, they all paid. So what it indicates to us is very poor credit control. And then there are one thing that National Treasury is very strong about is that they don't bail out local authorities. It's in actual fact legislated that national government does not guarantee funding and overdrafts and so forth of municipalities. And maybe one thing I can just add to that, a municipality is allowed to access short-term credit as long as they clear that overdraft by year end. So you can't go to financial statements with a credit. The challenge is the credit rating of half our municipalities will not allow them to get any funding. So these liquidity problems is a severe risk, I think, for you, because that will lead to poor water maintenance, sewage into the rivers, potholes that are not being fixed, water infrastructure, electricity and so forth. So that's why I've put that risk on there. Exportation of intellectual capital. I picked that up from I think Jaco, from your comments in the annual report, where it seems that there's a lot of intellectual capital that we've built over time. We've got a strong agriculture sector, but because of the slowness of decision making and all these sort of things, young people or even established farmers are just putting out the roots and they're moving elsewhere where they have policy certainty and so forth. And it seems to me when I read your report is that you are worried about this. It's the fact that we are losing valuable knowledge that we cannot retain, that the universal knowledge base is actually decreasing over time. I'm just going to go through all the external risks and then I'll give you time to comment. Okay, Russian-Ukrainian war, we understand that. You had it in various comments. It affects input prices. It also affects food stability. Your production risk is the fact that we live in a country where water is scarce and there's food in mouth and all these sort of things. We don't have good border control and that affects some of our industries. And then we end up with a situation where the Japanese are worried about our product and quality of product and so forth. So that is the production risk. The rise of social conflict and crime due to unemployment. We continuously see that. Unemployed people are burning things. They are harassing. They are, and they simply don't get to a space of employment. And as a rising industry or a growing industry, this is something that you can play a role in, but it's also affecting you. Financial risk is the fact that interest rates are rising all the time. New farmers are, when they're accessing loans and so forth, they're exposed to that interest rate risk rise, and that gives financial risk. And so I've added that there. And then a risk that I've picked up internationally that I thought I might just also add here is there's changing consumer demand, and it's about all the stuff that you put on your labels, the pressure from Mervyn King's report, for example, on the environment, carbon emissions and carbon neutrality and all those sort of things, traceability of product that you put into your product and the fertilizer that you use and so forth. I've rated that low, probably too low, but I think that changing consumer demand and in some countries like the EU is actually affecting sales quite dramatically. I try to limit them, but those are, I got it down to 12. Is there any of those risks that you feel falls, that you cannot impact? It's external, they are there, they are impacting your industry, but you cannot directly influence that you would like to add?
Thank you, Deon. I'm going to ask some of the management leaders here, Christo, Jaco, Neil, looking holistically at the sector at large, what would you foresee where we can take out, where we can put in managing the organization holistically? Christo, can I put you on the spot?
Yeah, I think Deon has done a good job in focusing on the external risk, and obviously part of the exercise is also to focus on the internal risk. Because as I've said earlier, the potential of Agri SA is just unimaginable. If we, create an environment where the organizations that are affiliated to Agri SA, feel confident and feel sort of very enthusiastic about the direction that we go into. I think that is important, is that if we decide this is the direction that we will go into, how do then we mitigate all of these external risk and other risk? Because risk and mitigation of risk obviously impacts or influence your strategy. You cannot develop a strategy without taking or having cognizance of all of these particular risks. So yeah, that would be, a statement from my side.
Thank you very much, Christo. Is there any of the other colleagues that feel Omri?
Thanks, Robert. Just an observation from my side. There's obviously the risks that you can do something about and the ones that you can't do something about. Now, speaking about an economic recession, there's not much you can do about an economic recession or the war between Ukraine and it's an external risk.
Omri, we can't hear like a...
Let me try again. Is this better?
Yes.
Okay, so there's risks you can do something about and some that you can't do something about. So international risks and economic recession risks and so on is not something that we can do much about. It's something that's either going to happen or not. So I'd like to see the risks kind of filtered out to the risks that we can do something about. And there is risks that we cannot do something about, but that requires intelligence in order for the members of Agri SA to know what is the horizon on input costs, fluctuations, or what is the chances that load shedding electricity prices will rise to 20%, stuff like that. And then there's ad hoc risks like the locust plagues, etc. So I think when you filter these, there's lots of these things in the basket, but which ones are the ones that you can control or do something about, and then eventually what are you going to do about it? Thank you.
Okay. Andrea, so the external risks are exactly that, Omri, because those are the risks that are impacting you, and there's not a lot you can do about them.
Yeah.
So I've put them separately, and then as we continue, I've put risks, of group risks together, where I think you can do things, or that might talk to your ability to change them. So that will come just after the external risks, but I agree with you on that. There's a chat.
There's also Kathy's hand. You can go, Kathy.
So I don't know if I missed it, but Deon, did you somewhere cover the risk that we have among our organizational structure? In other words, because we are gathered together, the various chambers, they've got different objectives. The members of the different chambers have got different objectives. How do you manage the risk of different people saying different things in terms of reputational risk that can then impact? Let's say we go for the PPP model and we are doing marvelously well, and then somebody says something that hasn't been kind of corrected out on the sidelines, and that entire PPP activity then is closed down. Just as an example, I don't know if I missed it and whether you had or hadn't included, because very often in our federation, that for me is one of the biggest risks, that there are just so many of us and organizations of organizations, etc. Thanks very much.
I'm just, I think it's important that that is a critical risk. I'm just thinking whether it's an external risk or an internal one. I think it's probably an internal risk in the sense that you have all these different role players, and you need to find the organizational structure that will optimize the relationships and the PPPs and all the things that you want to achieve. And at the same time, you want to optimize a communication policy where everybody is not allowed to talk on something. You need to have one angle of communication and one focus of communication so that everybody can understand what you are trying to achieve with that specific vehicle, PPP or whatever it might be. So I have, if we go down to the governance risks, I've got something there about structure. So let's visit it again there. And I also have something about your communication policy that I've put in there. But I've put that as internal risks. So these first 12 risks are things that are lying on the outside. Not a lot we can do about them. And if anybody can add one, please jump in a little bit later. All right. Let's stick then with those 12. You are welcome after the meeting to Andreas Salositsuriel, that if anybody thinks that, you know what, they want to give an input or they want to, that we can just accumulate the information and then we can adjust the risk register with whatever inputs we have. All right.
Yeah. Thank you, Deon. I just have a last hand here from Willem Symington, but I would also just want to tell everybody on the call that we will populate or distribute the risk register for further inputs as a first draft by next week. And then, yeah, we will work from there on.
Yeah.
Thanks.
All right.
Andrea,
Yeah.
thank you for giving me the opportunity. We're having a very high level discussion on risk and all the internal external risks. But for us as an organization, shouldn't we somewhere focus on the risk of our organization not being able to carry on as an organization? So what is the risk of Agri SA completely disappearing? Especially, and I motivate my point, especially by pointing out the polarization in our South African society. And it's a normal phenomenon when things go from bad to worse, that you get more extremist views and the middle ground gets sort of diminished. And we see ourselves as an organization that really occupies the middle ground. But through that, if you get a diminishing middle ground, you get a diminishing possibility of membership as well. And if we continue in the way that we do continue by pushing and following moderate policies that is outcome-based, may we not run the risk of totally disappearing of people that the membership base is going to diminish so much that you're not going to be able to carry on as an organization.
Yeah, I think that's I think it's a real risk, and I do not have that in, and I would probably, we can probably word it around your future sustainability. Is that you might lose that future sustainability because the people that would traditionally support you will simply find other places or other. Yeah, I think that's a real risk. Any organization, if you look at King 4, for example, they talk about profit, people, and planet, and that profit portion is about your right to exist and your right to be a future sustainability. I think I need to add that. Whether it's a external risk or an internal risk, I would probably put it somewhere around, with the governance. I'd add it under governance, and governance is about setting your own policies in your own direction and managing your own future sustainability. I think I'll take that one. I will add that one.
Thank you, Deon.
Yeah.
Apologies, just lost. There's Jock Jordan whose hand is raised. If you can, Jock.
Yes, thank you, Andrea. So I just want to know if, for me, the power of Agri SA is to facilitate solutions in difficult situations with the support of the producer or agriculture, but also with good relationship with the government. But if you take all the external factors into account, our farmers, the producers' financial and agricultural financial position is weakening. So we can intervene and maybe contribute, but the risk is that our farmers is the position, their financial position to participate is just weakening, and that also would maybe in the future you'll get to a tipping point that we're not in the position to contribute anymore to help facilitate solutions with the government. So I don't know where that fits in, but it's a concern for me.
If this was a face-to-face meeting, Jacques, I would have now shown you a video of what Bill Clinton did in Arkansas. It's a 3-minute clip, and I won't be able to lay my hands on it quickly now. But you know, at one stage they were facing the same thing. He's a Democrat, and the Republicans are not willing to finance the growth that he promised during his election, his election promises for the governorship. And then he had to find money somewhere. And the one option he had was to raise the taxes. And in the first 4 years of his term, people didn't like the fact that he raised taxes. And in the second 4 years, when he was there, he had to find different solutions. And the different solutions that he found developed around the bond market. He had to build new schools, and the Republicans didn't give him money for that, and he had to find that money from within. And initially, we all go the route of donations, and then there's a point where there's a maturity for those, or the appetite for donations disappear, because if you receive the donations, you cannot always show the value that you generate with those donations. And then Bill Clinton went away where he said, you know what, I need to find different tools. And he decided to enter the bond market. And a community in a specific area could buy bonds that he then, as a government institution, promised to repay after 5 years with a attractive interest rate. So it became like a pension fund type of investments. And then some of the pension funds started investing in his bonds and so forth. And he used that money to build schools. And then after 5 years, as the schools started paying their school fees and the children went to the school and so forth, and they started generating income, they repaid the bonds. The people who invested got a return on the bonds, and he got financing without asking for donations and without using taxpayers' money and increasing the taxes. So there's a different borrowing vehicle. So I don't know enough, Jacques, to say that is your solution for this. But if you are running, I have noticed that you went through a retrenchment program a while back, and I have noticed that you are now in the position where you can cover your expenditure fairly comfortably. And I have noticed that you have some investments, and you generate income, and you've got some property, and you generate some rent. But there are other options out there, and I think the idea would be is if you really want to. I'm not saying bonds is the answer, but there's some innovative stuff out there, and I think if you want to make interventions where people don't see as making donations, but where they see it as an investment. And the reason I think that will work is the fact that you've got a good product. You've got a growing product. It's the only industry in our country that is growing incrementally and exceptionally well. I think there's an opportunity. Is it the Agri SA opportunity? I would hope so, because you are the holding company of all these participants and so forth. And that might change the farmers and the people that can make contributions. It might change their opinion if it's not just a contribution for buying the right to intervene or buying the right to influence, but it's also an investment vehicle. And it's okay. And last comment on that, I'm not here to suggest solutions. I don't think it's my place. But the government in 1994 moved away from pension funds, and they started their own pension fund. And the government pension fund is probably that one public entity that is really doing well. I heard Davie Rood stating recently that the government pension fund has done exceptionally well. They've beaten inflation. Government officials should feel secured in the fact that everything is in good hands and it's well organized and clean audit reports and so forth. And Warren Buffett made his money by starting in that short-term insurance industry. So maybe as an organization where there's a lot of beneficiaries that are getting value out of your value chain, maybe it's time to rethink that value chain and maybe just sit down and say, if our future financial sustainability is under threat, How do we use this powerful product that we have with all these derivatives that is flowing from that to create value? And maybe that's on the risk management strategy side. And that's a whole nother discussion with, and then we will probably need to get some experts in there that can lead us. But I think there are answers. There are answers. Your value and future contributions will be driven by the impact that you make in the next 5 years. And I think the more impact you make and the more farmers see the value and the fact that you take some of these risks away, I think that builds trust. And you've already done it. You've got a good brand name and so forth. Ek dink ek babbel nou 'n bietjie te veel, but I hear that. So I'll put that as a risk. And so there will be two of them: the financial sustainability, and then your future income streams, which might be under threat because of pressure on the lower levels and the weakening of the farmers. A good point. Okay, on the political risks, and once again, what I try to do, Andrea, is when I got to 58 risks, I already knew it's too many. We don't have the capacity to manage 58 of them. So eventually I landed up with 3 political risks that I've put up here. It doesn't mean it's the only ones that we have. So the biggest one, of course, is land expropriation without compensation. The whole policy uncertainty around that, I think that is a political risk. I think as the political arena shifts, and as we will see with the next election, if everything happens the way we see it, the predictions see it at the moment, we will be right there in the middle of coalition governments, and that is not working. That creates more uncertainty, as we can see in Tshwane and Ekurhuleni, and even here in some of the municipalities in the Western Cape, like Kannaland and so forth. So land expropriation, it remains a high risk, and maybe it's not even 8 and 10, maybe it's 10 and 10. The reason I made it 8 on the likelihood side is there were some comments in your annual report that it seems like the urgency to get this done is waning a little bit, and it seems like there's that initial urgency is not on the radar now. Transformation programs, I've put it on two levels here. As a political risk, of course, it's a political agenda. And the political agenda talks about the fact that you need to achieve some goals on developing farmers from the previously disadvantaged communities. And I can see there's a lot of initiatives and a lot of successes that you've done there. But I mean, that is a big risk. I also, with a lot of respect, put a second one in, and it's the fact that if I look at your annual report, I see a lot of mature gentlemen that's part of the organization, and I see a lot of you on this as part of the same racial group. And without making any comments or criticizing, I think the pressure is mounting across the country to get that sorted out. And my example that I want to put on the table is Swartland municipality. Swartland municipality is a highly effective municipality. They sit with about R1 billion in the bank. Very good with credit control. Amazing with developing local economic opportunities for the rural communities. Really up there in terms of good governance and so forth. And the pressure on them to reform has increased incrementally over the last 3 years. Every time there's a position that is advertised on the top end of the business, there's a big pressure to transform and so forth. So I think in your organization, there will be pressure on that. I'm putting it out there. Whether you want that as a risk or not, it's not my place to say. So transformation, getting black farmers in the business, get them to contribute, all those sort of things. Transformation is that some of those farmers will eventually need to find their way to your management structures. Political change, I think I've said enough about that. There will be elections now. There will be changes. Dawie Rood says if the ANC gets less than 40%, 50%, it will be worse than if they get 51%. And the reason for that is we will go into coalition governments, and that will bring the EFF forward. And I'm not making a political statement, but there are different opinions there, and that influences your job, and that's why I put it on the risk register. Just want to see there's a question. Okay, Jack needs to go. All right. So any other political risks? I've chosen those three. You can add any political risks that you think I can add. Any comments?
Doesn't look like it, Deon. Thanks.
Right.
Yeah.
Okay, I'm continuing. Environmental risks. It's becoming more and more important in your life. So I've seen water use entitlements. I'm not going to talk about that because it wasn't your risk register last time. And it's about that. I think it's section 25. That part of. And then also, if you sell your farm or you buy a new farm, whether the water rights are coming with it and so forth. So that is that risk. Climate change is a really big risk. Carbon emissions, and then also the consequences of climate change on weather and so forth. So I've put that on a risk. Christo, I just want to leave something with you, and I don't know enough to make a big point of it today. But if you don't mind to make a note on it, and I will gladly revert back to you in the near future. And I don't want to waste your time, all senior people with lots of responsibilities, but just one example. There's a guy in Stellenbosch with the name of Deon Westhuizen. And Deon Westhuizen, he's the guy that designed SnapScan and those sort of things, and then eventually sold it. He made some money, and then he developed the financial systems in Iceland, and then he sold that. And he is now in a position where he's not chasing personal wealth anymore, but he really wants to make a difference. And the avenue that he chose to make a difference is the avenue of carbon credits. So a carbon credit is something that you do as an opposite to carbon emissions. So carbon emissions will, in my language, be a carbon debit, and then eventually we need to nullify that carbon debit with carbon credits. In terms of international legislation, if you are in debit with your carbon emissions, then you need to pay taxes or penalties, or you need to buy carbon credits somewhere in the world. Deon has planted 1 million olive trees, and he's put it in a very sophisticated model. Because he is in a cloud computing and a cloud financial payment system, everything is up in the air. What Deon has developed is he's developed a system where each of those million trees can be tracked by a QR code, and people can buy and sell the trees by QR code in the cloud. So you don't need to physically move the trees. The trees have a purchase price when they are small, and then obviously the purchase price grows over time. There's a capital growth. The trees will produce olives over time, and that will give an annuity income to the owner. It's not the point I want to make. That's the business you know well. But then Deon is doing a third thing. He's equating his million trees to carbon credits. And those carbon credits will be located in the cloud as some sort of investment vehicle. And then people that need to buy carbon credits will be able to buy it in this mechanism from Deon. And he is negating anybody with a carbon debit. So why do I put it up here now? All of you are in farming. And when you plant things, I would imagine, the animal farmers, the skape and die beesboere is miskien net bietjie iets anders nou, but I'm sure that there's some value to be derived from carbon credits. And I don't know where and how it will happen, and I don't know whether you need to engage with somebody like a Deon or whether that's an initiative that Agri SA can do. But here is an income source that is coming out of agriculture that might be an additional income source that we never thought about. And that additional income source can alleviate some of the issues that Jacques brought to the table in terms of marginal farmers, that the marginal farmer can actually have a third or a fourth income stream because of carbon credits. So I've put it in there, that carbon emissions, and that we think about that, but there are big movements in terms of that, just maybe. Okay, number 18.
Deon, sorry.
Yes.
May I just ask Janse? Janse is head of our legal and policy unit, and is also very knowledgeable about this. Janse, if you perhaps just can comment on this.
Yeah, indeed, Christo, and thank you, Deon, for pointing that out. One of the big issues with carbon credits for individual farmers is the red tape associated with it. That is one thing that Agri SA keeps on struggling with, is obviously the mechanism, the auditing, the market. If we have a solution in the form of a Deon Westhuizen who would be able to guide us, and as far as what Agri SA can do to contribute, that is certainly something we'll take up. We've had various initiatives reaching out to various organizations, including SA, South African Revenue Service as well, on these kind of things and initiatives, as well as the Development Bank. And they keep on running into the same thing, you know, the complexity of carbon credits for individual farmers. That doesn't negate, obviously, the role that Agri SA can take in facilitating and streamlining those processes. So thank you for pointing that out.
Yeah. Okay. Good. Yeah. Okay. Christo, I will set up a short chat somewhere with Deon, and then you and Janse can talk about that. I understand the complexity. You know, the smaller you, but I mean, for the bigger farmers, I'm thinking about the wine farmers and so forth. You know, there might be some value, and I'm just thinking also, Janse, if that becomes an Agri SA type vehicle, you know, and like any bank, you take a margin on facilitating the vehicle and the transactions and so forth, you know, that can be a annuity income to Agri SA. But let's park that one then, and we can explore it with Deon. He's the knowledgeable guy. Okay, disaster management, the inability of the state to react to disasters of any kind. I think that's an environmental risk, and we've seen it in KwaZulu-Natal with the floods and the sewage in the river and so forth. I think you also had it on your previous risk assessment. Drought is a big issue. My brother-in-law bought a farm close to the Orange River there in Burgersdorp's area. And preceding the time when he bought the farm, it was very dry and, you know, all sorts of challenges. He's on the farm now for 4 years and he's getting record rain seasons every year. So he says he doesn't know about drought. He hasn't experienced that yet. But of course, here in the Western Cape, 2, 3, 4 years ago, in the Southern Cape, we had that drought. It is a big issue. And I think the long-term planning in terms of water and security and the government's role here is really a challenge. Biosecurity was on your risk last year with the foot and mouth disease. It's still there. Pollution of natural resources is environmental risk. It comes from sewage spillages and so forth. That was on your risk last year. And then you had 3 risks that I did not remove because I just didn't understand them at the time. But competition for natural resources. I mean, you are an industry and you rely on water and so forth, but there's also, increasing demand on water from municipalities. And specifically, Christo, I don't know, and the people that will know, there are some municipalities that lose 40% of the water that they procure from the water service providers. They will buy 100 liters of water and eventually they'll only be able to sell 60 liters, and 40 liters along the way will get spilled through leaking pipes and so forth. So that is one of those things that are really, really putting pressure on our natural water resources. Natural resource degradation, you had it last time. I left the ratings as it is. And then scarlet gas exploration is still there. I haven't heard a lot about that, but I've left those risks there. If anybody thinks I should take them off, or I should explain them a little bit better, I would appreciate the inputs there.
Thank you so much, Deon. There was an earlier hand from Johan Hackworth. I don't know if you would like to come in and ask the question again.
Thanks, Andrea. Yeah, I just I was a bit slow on the response there to the political risks. I'm just wondering if one shouldn't include there something about the international, so call it the geopolitical positioning of South Africa. With the crisis that's facing us, I think we're going to have to position ourselves geopolitically very well, and if we lean, let's say we lean towards the east 80% and to the west 20%, that can pose that can have long-term implications. Well, it can even have short-term implications. And I'm just thinking, of the wording. Let's say incorrect. The risk is incorrect geopolitical positioning. So that's more an international political risk, but that's relevant to our country. I don't know if that could possibly be included. Thanks.
Okay, I think it should be there. I should have put it in there. It is critical. And if we look at now with the Russian and the Durban and the missiles, the missile practicing exercise, the fact that we don't think about these things, it puts us in a position where certain people that are buying from us, like the UK and the Europe, where we export a lot of stuff to, we get under pressure with that, and I should have put that in there. Yeah, I'll add that. Thank you.
Thank you, Deon. Is there any other person here who wants to comment on environmental risks? As I said, we will share this as a first draft, so you can sit in the comfort of your own time and just add on motivations and also assess the risk scale according to your need. Thanks.
Yeah, and Kristen, yeah, I've just last night looked at the Landbou Weekblad, and there's an entire article about the amount of illegal coal mines that are operating now in provinces such as Limpopo, as well as Mpumalanga. Robert Davel, gave a huge amount of input. That is certainly a massive threat for the agricultural sector, because we are bound by national laws and national treaties where we need to play a role in reducing our carbon footprint. Perhaps if Robert can just allude to that, even Deirdre and Janse.
Deirdre?
Thank you, Chair. Yeah, Chair, that is really a challenge we have in Limpopo specifically, but I think it's not only in Limpopo, it's, across the country. If we have a look at what is currently happening, there's a new phenomena that's happening, and that is where you've got sand mines popping up everywhere, you've got coal mines popping up everywhere, and it's just mining in general. Now, part of the challenge is that people have now found the loophole where they would, for example, apply for a 5 hectares. So it means they don't have to do environmental impact assessment. And therefore, they're using that, but they use the same EAP, for example, and then have up to 18 5-hectare pieces next to one another. Then it's just total lawlessness. Even if we look from the provincial side, with the minister just delegating her powers over to, for example, to the province. So the very same people who actually wanted is making the decisions, like we can see with the Messina Mercado SEZ, where there's not even, and they're also working with stuff piecemeal. They've also seen that as a loophole. So what they do is they take they do the first EIA, which is just for debushing, okay, and then they don't have to do the impact on agriculture. So they're doing it sort of piecemeal, not an EIA on the entire project. And this is causing really havoc in our province, and I'm quite sure that it will be causing havoc in other provinces as well. Thank you, Chair.
Thank you.
Andrea?
Yes, Robert?
Yes, from my side, I just want to confirm exactly what Deirdre, the picture she put to you. It is the same here. It's a big trouble for us and for our members specifically. Thank you.
Thank you, Robert. Deon, you can respond. Thanks.
I will add that I think it's there are 3 things that I picked up: the geopolitical positioning, the illegal mining, and then the fact that there are these environmental studies that are sometimes not required, and the impact that has on you. So I will add that I think it's environmental risks, and we need to address them. They're a little bit of an external nature, but I do get the impact. I will add them. Thank you. Valuable comments.
Thanks. Deon, just Janse Rabie, he's our head of our Natural Resources Center of Excellence at Agri SA. Thank you, Janse.
Yeah, short one, Andrea and Deon. The issue is not mining, it's the institutional failure with respect to the regulation of mining. So, mines can have a very important role to play in the South African economy, but there needs to be regulation that's properly enforced and properly applied. And that is the almost the overarching. It's not so much an environmental issue; it's about a regulation issue. I think that.
Okay. So, do you think that should go under political then?
I agree.
Yeah. All right.
Thank you, Deirdre. I saw your hand were up, but you took it down. Do you have any last comment?
No, thank you. I think Janse actually put it a lot better than what I would have put it. Thank you.
Okay, no, perfect. Thank you, Deon.
Okay, I just in terms of Deirdre, you made a point about the coalition government and so forth. So I think in terms of political changes, I think we've covered that under the political risks. You know, I can word it based on all the comments. I can word it a little bit better, and I will do that. I agree with you. If we have a coalition government, the challenge is it's not a short-term thing. It's for the next 5 years that you will find this instability, and it's going to affect every other thing, every single piece of law that is lying somewhere that needs to be approved. It's going to be almost like Trump and Biden. You know, Trump approved a lot of policies, and the moment Biden went in, he started reversing those, started changing processes and so forth. Just for interest's sake, and you might not experience it, or maybe you even experience it better than I do. That our national legislation, in terms of national, provincial, and local government, has a very strong emphasis on public participation. And if you look at the international view on how strong our legislative frameworks are and our laws are, people rate us extremely high in terms of the design of those things. And one of the strong points why people rate us high is the fact that we have this enforced public participation. Of course, the reason is that the challenge is that we have brilliant laws, but very, very poor execution. And then if people don't comply with the laws, we do not keep them accountable. So that is a challenge that we have. So what worries me with the coalition government is that strong participatory flavor that we have, where it's now a legislative responsibility to publicly participate. I think if you get a coalition government, that is going to be challenged. Where if you want to achieve certain political goals, you cannot wait 5 years or 4 years before you push those things through. And we might lose that public participation role. Your role, and what I read in your annual report, is you are an excellent public participant in the sense that you keep on pushing and you keep on engaging and you keep on facilitating, you know. And so maybe there is a risk as well under that political change. I remember Kali Kriel, before AfriForum was even an event, I heard him a speech saying one day, and somebody asked him, why do you take Julius Malema to court every now and again? This is about 15 years ago. And Kali shared something in the audience. I was in a conference and he was a speaker there. And he shared this comment. He says, you know, it is the public's responsibility that if there's an event that is unconstitutional, that we need to challenge it. Because what we do over time is every time we go to the Constitutional Court, we are endorsing the legal principles that are in the Constitution. And there will be opinions and there will be, you know, there will be rulings, and eventually that ruling will form part of case law and so forth. And that is why we need to do it. And I think that is why you are an important role player as well. The fact that you keep on pushing and keep on participating endorses the fact that there's a legislative framework. You do the public participation role very good, very well. And because of that, you are having an influence, and we cannot afford that you stop doing that. You know, and that is the same with public participation from our side. That's a real threat of coalition government. I just want to look at the chat box. There are 4 chats. Sorry that I. Okay, Deirdre, I hear. I know it's a ticking box. Of course it is. Of course it is. I can give you at least 10 examples where people are really doing it well and where it has tremendous results. So it's not a big movement. It's not in South Africa where everybody feels they are publicly participating. I'm guilty myself. You know, often I'll be invited to go and publicly participate, and if I feel that is not my area, then I would maybe refrain from doing so. But there are success stories, and it is frustrating if we don't have that impact that we actually want to have. Okay, on the governance side, a couple of things. Yes.
Sorry, just quickly, Deirdre wants to respond.
Okay, Deirdre.
Yeah, thank you so much. Yeah, you know, I served on the expropriation committee, and even if we have a look at the inputs we have received, was far exceeding those against expropriation without compensation. But at the end of the day, the public participation process we're having in the country is really based on, doesn't matter what the public says, it is based on what the ruling party's policy says. But I think a very important point is not only for Agri SA to participate in public participation processes, I think it is absolutely crucial that we all, the farmers at ground level, also needs to get more involved in order for us to have a leg to stand on if we ever have to challenge a situation or, a public participation process. I'm just looking especially when the first process started with expropriation without compensation. I mean, I had documents, it was 37,000 inputs that said against. And I mean, it was absolutely government policy that was pushed. So I think what we need to do with a message to get through is that it's not only the responsibility of the provincial affiliates or Agri SA, but it would actually be for each and every single farmer to get involved. Thank you.
Yeah. Deirdre, I know I heard a lot of farmers talking about the fact that they've sent comments and so forth, and this overwhelming opinion that was formed. So it must be frustrating if you have the mass opinion behind you and you cannot, there's not a positive outcome out of that. I think, and this is something we will not achieve in this round, Andrea, if we can just make a note of that as well, is that I've seen the design of your organization and the pockets that you are working in, and I see similar correlations between those different pockets and so forth. So when we implement the risk management, and we want the risk management to get to that picture that I showed you early this morning, when we want to get the risk management there's a point when we start looking at the risks slightly differently, where we don't identify risks in a silo format, which is what we are doing now. We're putting it in the governance silo, and we put it in the human resources silo and so forth. But then we start looking at the risks on an integrated basis. And yesterday when I chatted with Andrea, I said, you know what, I think it's just too early for us to take one risk and put it across 5 different elements, or 5 different, or on an integrated basis. So in your specific case, is the fact that and I'm just using an example, and I'm thinking about this now. I didn't think it through, so I might even be wrong and silly about this. But you see that if I think one of your challenges is, if you look at your organization and you position yourself and you look at your transformation goals that you have on the one side, and then you look at the opinions that you have on the other side, I think sometimes we find that we need to address 2 things to get a positive outcome. There is a perception that we have not transformed the farming industry enough. And I'm not making a point, I'm just raising something. We haven't transformed enough, and therefore the public participation that we get comes from one group of people. And therefore it loses a little bit of that value, or the way that people perceive that value. And there's nothing we can do about it now, because you do have transformation goals and you do have public participation goals, and you are successfully moving forward on both those angles. So it's also a little bit of a timing thing. And how do you get it? And making sure that when we push one part of the agenda, that it's also that the building blocks that are getting a success in that challenge, that those building blocks are also moving forward, integrated. So as we different elements is building towards the same outcome. I think it's a little bit early now. I would have loved that would have been this round, but I think we're just building the risk register to start off with. And maybe in a 3 months' time or so, we can engage and see how do we move it forward once again. Well, I made a note of that point, and I will see how I can include it. Okay, on the governance risks, King 4, the ESG challenges. I just put it out there. It's almost a repeat of carbon and so forth, but ESG is the topic of the day. Recently, I was in Dubai and I spoke at the international conference, and there were two. After the conference, there were 2 streams, and people could attend 2 types of courses. So I was presenting combined assurance as how do you utilize your auditors and your risk management to help you to create value. That was my angle. But there was a gentleman from the UK who had a second stream, and his stream was ESG auditing. How do you audit all these ESG challenges and risk-based auditing and so forth? And there were about 2,000 participants in the conference, and they split into 2, and both our spaces could accommodate about 1,500. But I only got about 700 people coming to listen to me. and about 1,300 people went to listen to this ESG session. It's a whole day session. And I had an opportunity to talk to the presenter afterwards, and he says to me, Deon, this is an area that is absolutely exploding across the world. You know, ESG is so big, you know, and that is why I've put it in here. We in terms of legislation, we're getting there. In terms of applying the legislation effectively, you know, we're getting there. We're not there yet. But I think the pressure will increase tremendously over the next 3 years so that we could achieve those ESG challenges. And of course, we need to do that. Mervyn King coming from South Africa and so forth. Effective governance structures, I think, it's not a low risk for the moment, but I did hear some comments earlier that I might change this, where you need to maybe revisit your structures and, you know, the participation and so forth. So maybe the fact that I rated this risk as a green risk is wrong. But yeah, I was looking at the fact that you are an institution, there are governance structures, you've got all these different pockets of knowledge. Everybody that's in that pocket is extremely skilled with academic and practical experience and so forth. You have clean audit reports, and that's probably, you know, my perception is you've got this sorted. But governance, we all know, Christo, I heard you speaking on the radio yesterday that the 1st of March next year, you might no longer be in this position. And I think this is also where we now need to start talking about effective succession planning and so forth. I've included that under the human resources risk, but I always believed the moment you make big changes at the top, you need to revisit your governance structures. New leaders bring new ideas, brings new certainties, and brings new uncertainties. So for the moment, there's stability, and Christo is around for the next year, and there's going to be all sorts of activities to interview and to replace. But the closer you get to that date, I think the risk will increase over time, simply because that's the way organizations work. Building effective relationships between agriculture, government department, and industry organizations, I think that is one of your main drivers. The fact that it's a red risk does not mean you don't do anything about it. Inherently, this is the one thing that you need to get right. Everybody in the agriculture sector looks up to you. This is what you need to get right. You need your government to listen. You need them to intervene. You need them to react. You need them to speed up the legislation. They need to look at your participation processes and so forth. So that is a key risk to me. Policy design, not focusing on all key elements of the industry. And here I'm talking about your own policy design. This is a risk that is flowing from your previous risk assessment, and how you design your own policies and your own participatory frameworks in terms of all the different role players. I think you are well structured, but there's always new things that you need to do. And I included that again, also because I think you will need to look at your policies in terms of your future income streams and how you're going to participate in terms of, are you going to be active participants in terms of PPPs and so forth. I think that fits into there. And then in governance risks, that risk that I think Deidre mentioned earlier, that communication risk is, at the moment, I think you have sufficient coverage. I said to Andrea yesterday, you know, I drive a lot, and I'm often here when they interview Christo, and I listen to the opinions, and sometimes I'm up early in the morning and I hear those comments that you make. And I'm really listening to a lot of things that Agri SA is communicating. But I've learned so much more when I read through your annual report. And the question I asked to myself, am I just not interested enough in your industry, or do I not hear enough of those good stories, I don't know how to put it in a different way. Do I just not hear enough communication? So I see your successes. I see how you communicate. I see the TV programs that you've done. I think you've done a lot of good things, but I think the communication and influencing the decision makers, from my perspective, I hear a lot, but I didn't hear everything. I didn't hear about all the successes. And maybe it's a timing thing, and when I'm in the car and when I'm not, and so forth. I put a quote there at the moment. You know, I think you all know about Malcolm Gladwell's book, Tipping Point, and one of you mentioned the tipping point as well. You know, it's about re-endorsing and reinforcing all these opinions and these successes that we will eventually, hopefully, influence the perception of all the participants and so forth. So I think those are the key ones. I don't know if there's any other governance risks. Most of those came from your previous one. I've just grouped them together in terms of governance, and it also talks to the COSO model.
Thank you so much, Deon. This is very insightful. I want to propose, I'm first going to ask for questions and then propose if we can just have a 10-minute comfort break, if that's fine. I would also like to see our heads of the different centers for economics or Janssen, etc. Also now giving more input, I think what you've been experiencing within your center as well when it comes to those parts. But yeah, that's from my side. If there's any questions, please feel free to ask or to comment.
Yeah, and I think just to add to what Andre is saying is that, you know, we have identified a whole lot of external risk at a macro level and even internal risk at a macro level. But as we become more, you know, focused on the bread and butter issues, the granular stuff, that's where your heads of the various centers of excellence and the heads of the various chambers, together with the chairpersons, perhaps can give more input. Because this is certainly what we seek to achieve through this exercise, is to say, right, this is a sort of risk at a macro level, and how do we respond as an ecosystem? In other words, as the Agri SA family, as the agriculture sector towards that. And I think in that regard, Agri SA already plays a very specific role. But as I said earlier, if you unlock the true potential of all of the organizations that are members of Agri SA, I tell you, we will be able to move mountains. And then the second issue is obviously, how do we then respond to the risk at a more granular level? In other words, what are the specific issues that farmers face in terms of safety? What are the specific issues they face in terms of natural resources, land and water, in terms of markets, in terms of market access, in terms of ensuring that we deliver world-class products to the international world, and then and how do we address those issues via the structures that we have with the operational structures within Agri SA. And I think you know, we all understand exactly what are the governance structures and / strategic structures and the operational structures. So I would like us to also spend a bit of time on that. Thanks, Andrea.
Thank you, Christo. Gerard?
Andrea, thanks. Christo touched in his latter part of his response to what I wanted to say, but I think while we now look, like Deon said, in a silo basis on Agri SA, actually most of the corporate companies playing in the agri space will sit most probably with an overlap of at least 80%, because if the farmers go, the agricultural side of their businesses, like BASA's members, the banks, they will also struggle. So I think I look forward with excitement to, once we look at the integrated level in the agricultural value chain, Christo, then it's where we will be able to add a lot of value. So thanks, Andrea. And thanks, Deon.
Thank you for the inputs, Gerard and Christo. Deon, would you like to respond? And then we can just take a 5-minute comfort break. We can keep it short, just for everybody to refill their coffee, if that's fine. Deon? I think you're on mute.
I'm on mute, sorry. When you look at your strategic risks, then eventually you need to tie them to your key processes. And once you work in the key process, that is when we break it down into that level that he's talking about, and that is exactly right. And then in terms of Gerard's point is, Gerard is, you know, the nice thing about the risk management, the painful thing is to get it started. You know, is to put, if we put the risk down now, we never see each other again, then I can tell you we're not going to get anywhere. As you need to take this risk, you need to start building the models where eventually it informs decisions, and then eventually it's so integrated that you can address one risk across 7 different industries or 7 different participants, and then you make a difference because everybody is pulling their weight to reduce that risk in a certain area. So both of you are exactly right. I think that is the next phase, and we need to work with that. Andrea, right. Let's have a 5-minute break. I see it's 11:14. Shall we make it 11:20?
Yes, that's perfect. Thank you.
Bye, thank you.
Okay.
I was so looking forward to that cup of coffee, and then we have a power outage. So I didn't get that. I'll have it afterwards. Okay, so if we move down to economic risks, I'm not sure. I tried to get a better opinion. Well, the first one, of course, is increased growth and production against the development of new markets. You know, it's something that I've picked up from your annual report, where you have this massive increase in productivity from the farmers, and then we find all these issues with the tomatoes to Botswana, or the citrus and the pears to Russia, and the wool to China, and you know, so there's these markets that is almost resisting sometimes, or there's some issues with the markets and so forth. So I think that is a big risk, and it will incrementally, I think, get bigger. I'm always fascinated when I travel. I'm a wine consumer because I come here from the Western Cape, and I really like to see how the wine farmers are doing overseas. And I visited Finland, and I went to a wine shop in Finland, and I asked the lady, you know, how does it work, the prices and so forth. So she said, well, it's easy. You start on the right top-hand corner, and that will be the most expensive wines. And as you move to the left, the wines will become cheaper, and then you go down one row, and then you go across, and they get cheaper, and you keep on following that. And when you reach the left-hand bottom corner, that's where you find the cheapest wines. So I started looking at the top, expecting to find some of our wines there. And eventually, I got to the bottom left-hand side, and I found 4 bottles of South African wine, and they were the 4 bottles that were the cheapest. And you know, it's something that I just cannot comprehend yet. We do have wonderful wines, but how is it possible that our wines will be really listed as the cheapest? Is that a reflection of quality? I'm not so sure. But in any case, so that's one thing that I picked up, and I think when I look at the number of comments that you've submitted in your annual report, it drives that. You know, we increase production, but do we have the markets that are willing to buy, and are there limitations for those markets because of all sorts of issues to take up our product? Liquidation of the land bank was very highly rated at the time. The land bank was struggling with cash flow. It seems like there's a little bit of an improvement there, but it remains a big risk. I've added number 32 is the fact that now that if we find the government unwilling to finance, that our own alternatives for investment is also limited. I mean, after 30 years of democracy, we're still sitting with 5 investment graded banks, Absa and Nedbank and Standard Bank and FNB and Investec, and we really need we need some other commercial banks to step up to that investment graded plate. And the reason we need to do that is if a bank is rated as an investment graded bank, then it can do business with government. And doing business with government means that there's a lot of these national, provincial, and local authorities that are investing money, or they need to put it, you know, these short-term investments in investment graded banks. And that volume of money can then be utilized as potential investment alternatives. But we're still sitting with the same 5, and those 5 are I'm not sure if agriculture is one of the best investment focuses, and therefore limited investment alternatives. Capital is needed to grow, and I've put it down on the risk. National fiscal crisis. It's a risk that has not been in your risk register before. But I picked it up from your annual report. There's growing impairment in government. There's write-off of debt. I mean, billions of rands are owed to Eskom that will probably never be collected and so forth. And that provides this fiscal crisis that we have. The toll roads have just been abolished in Gauteng, and the investment that we've had there that government needs to repay. And then we are over-borrowed. Everybody is sort of stating that line at the moment. So there's a fiscal crisis, and with growing impairment and debt. That is focusing us. Stagnant, low economic growth, and we just can't get out of that. The government has now done rapid economic transformation policies. They've got economic growth policies, and if you look at the target dates, the economic transformation policy that was targeted for 2020 did not make a big difference. And if you look at the number of taxpayers and so forth, not growing incrementally. So that economic growth is also affecting your business. Trade barriers and access to markets, it is an issue. I've read somewhere on one international site when I tried to look at, international risks that might apply to South Africa, and as part of access to markets, they list our lack of predictive modeling tools as a high risk. Predictive modeling is about future weather trends, future usage patterns, all those sort of things where we can use automated systems to help us to predict and plan and volume control and all sorts of things that I won't know about. But it seems like that the role of artificial intelligence in the world is increasing on a regular basis at an extremely fast rate, and maybe we are just not in that space at the moment, and therefore I've included that in there. Competitiveness, was there capital constraints, is a big issue. National government that fails to support, they fail to subsidize, they don't necessarily see the growth in exports as this beautiful, wonderful product and so forth. And then a risk that is flowing from your last risk assessment was the hyperinflation economy. I see that, I hear that, I don't think we are where Zimbabwe was. So I left it in there because we have the potential for acceleration in the inflation rate. I do trust our Reserve Bank. I think they do inflation targeting. I think the fact that they push up the interest rates at the moment is a very strong inflation control. And the fact that they've done it now 3 or 4 times in a row shows me that there is will to reduce the inflation and bring the cost of goods down. Of course, that is influenced by the Russian-Ukrainian war and the oil price and so forth. So I think we need to leave it there. Is it a strategic risk that we need to manage aggressively at the moment? I don't think so. But maybe it's just something that we need to be aware of. So I've left that one in there. In terms of financial risks, I think these are, I've worded them differently. And Christy, with this, I don't mean that when we look at the risk, remember it's the inherent nature. Doesn't mean that is the reality. Ne? So I've decided to include 4 of them in financial risks. I'm sure we can add more, but out of what I've learned from your annual report and from previous risk assessments, this is what I have listed. So the first one is your liquidity. And for those of you that are not financially inclined, apologies if I underestimate your skills in this area. Liquidity is about your ability to pay your short-term commitments. It's normally about your current ratio, and do you have enough current assets to cover your current liabilities? In South Africa, we have 257 municipalities, for example, and about 120 of them is sitting in a position where there's a serious concern whether they will be continuing as a normal going concern type of business. So that is the liquidity risk. I didn't make it too high because you do have investments and you can also tap into that investment if you needed to. I can see that you avoid trying to do that. But liquidity is I think is that risk that I worry about. Earlier, one of you made the comment about your financial sustainability, and I think I will probably add that risk somewhere around here. The second one is your profitability, and the profitability is your ability to cover your expenses with income. And I've recognized the different income streams that you have, but the idea would be obviously to increase your profitability. And then Jacques also made those comments about the fact that there might not be an ability of all your members to keep on sponsoring or keep on donating or keep on contributing. So as part of that profitability. I'll come back to number 41 just now. Number 42 is your solvability. So solvability is looking at your net assets. And at the moment, it seems like I think you have fixed assets, and those fixed assets have been down or valued down due to tenant ratios and so forth. And then I also noted that you're not too happy with your performance of your long-term investment, and that you might be looking at opportunities there. So solvability is the risk of not optimizing the asset base that you have. 3 risks. So can you pay your short-term liabilities? Can you make profit, income exceeding your bottom line? And how do you apply that? And then thirdly, can you optimize your assets? I've added number 41.
Deon?
Yes?
Crystal, I think what is important in here is to also look at or define, let me rather use the word define, our membership model, right, as a risk, because we have a separate membership model and a unique membership model for each of the chambers. And that's the big difference between an Agri SA and AfriForum. If you want to sign up as AfriForum member, you pay, say, 100 Rand each member, and that's how they then derive their annuity from on an annual basis. Agri SA, in return, for each of the chambers, there's a different model, and that in itself poses a massive, massive risk to the organization if there's no clarity in terms of those models going forward. And if those models from time to time change due to a whole range of variables that we do have control over. And that's the interesting thing, because you do have, as an organization, you do have control over your membership models. If you're specifically referring to your membership fee models, but also your membership benefit models. And those two goes hand in hand. Then I would like us to perhaps make those, IRRs, those inherent risk levels, to perhaps, seriously consider it, taking it more to a sort of serious risk level. Because ultimately, Agri SA is highly dependent on membership fees. We have seen what can happen if you erode your investments. And we've seen how, due to the economic constraints, how we are now under pressure just to get people to take up space in Agri SA. So that in short is what I want to emphasize. Thanks, Deon.
Christo, I will add them, and I think it's two valuable contributions there. It must be in there. I think I will actually then maybe look at, because when I thought of number 41, I thought of those annuity income streams, and I think you've just put it better. I think the fact that you've separated the two, the value model and the fee model and so forth, I will include there, and I will increase the inherent risk there, so that we can have a look at that. I just want to, it doesn't mean that I think you don't understand for the broad audience. Remember, inherent risk doesn't mean you are facing a liquidity crisis. No. If you don't manage your liquidity, it's just the inherent nature of that. Once again, I think we can probably add more to it, but I thought those are then, with the membership one's contribution, those are the risks that you really need to be worried about on a board level, and I think it's probably sufficient. On the legal side, there's... Yes, Andrea?
Sorry, om jou in die rede te val. I just want to ask the floor, I know we skipped question and answers for environmental risk, so maybe if there's anyone from the floor who want to add on previous environmental risks, and the financial risk, then we can perhaps move on to legal and compliance. Is that fine with you, Deon?
Yes, it is. I think people added the environmental already, Andrea, but if there are more, I would gladly listen.
Andrea, maybe just from my side, I don't want to add something, but I would just ask Deon to, while Christo has raised those two concerns of the membership fee model as well as the recurring income. We must put in bold behind it potential, because there's a huge potential if we can, once we look at the, let's say, across the board basis. Currently, we tend to be focused internally and to the government, but not necessarily speaking to the challenges that maybe some smaller identities and businesses face out there. And once we rectify that, I think this risk will reduce. But I think the fact that we're going to get the opportunity to look at the risk register after we've gone through it now, I think we will send you the input, Andrea, to collate and then send back to Deon as well.
Thank you, Gerard. Christo, do you have a legacy hand?
Sorry.
You've got your hand up. Can you hear me? Okay, perfect. Thank you. Yes, we will definitely distribute the risk register afterwards for further input. Janse?
Andrea, just a quick question from my side again, is that on the environmental risks, climate change.
Janse, we can't hear you. Sorry.
I'm sorry, it might be a technological issue. Andrea, can you hear me better now?
Yes.
Climate change as a risk, or an environmental risk, is a difficult one to get your head around sometimes because it's very much also an external risk. I wonder if Deon could just unpack that a little bit for us. How does one quantify climate change as a risk for the agricultural sector in South Africa as such, whether it's actually not perhaps a misnomer, you know, quantifying or listing that as a risk, and whether one shouldn't be very much more specific as to what the exact implications of climate change are that are in fact the risks that should be included in such a register.
Thanks, Janse. Deon?
Just want to quickly see that. I agree with you on the fact that, you know, if you look at climate change and the fact that we can't, there's nothing we can really do about it in terms of short-term activities. It's about, you know, COP25 and COP26 and the international investment and the turnaround and the target of 2050 where we want to reduce carbon emissions or get it carbon negative and all those sort of things. So that is why I've split it into two. You know, so the one risk that is talking to you is the fact that climate change is there. We need to take it seriously, and whatever we can do in-house, on farms or whatever to reduce, you know, the contribution we make to earth warming and so forth. And I've read it somewhere. I'm trying to remember now. One of the contributors in your annual report wrote about the change of is it feeding of animals, because animals obviously produce a lot of carbon, and you know, there's some interventions that the international market is doing to reduce carbon. I forgot now, but there's, you know, I got it from somewhere around there that maybe there are things that we can do in-house, you know, with our farming practices to just do our little bit to change climate. But of course, climate change has a significant impact on you. Maybe it's an external risk. I agree with you, Janse. The reason why I put it under environmental risk is probably the second one. And that is where we had the discussion about Deon Westhuizen, is that maybe there are things we can do, but here, climate change because of carbon emissions, and maybe there's an angle where we can intervene through carbon credits or and that. So that's the exploration, and that's why I parked it there. I don't have a better answer to that at the moment, Janse. I need to think about what you've just said. Is it external? Is it environmental? Yeah. Sorry, man, I don't have a better answer now. Let me think about that one.
Deon, we grapple with that all the time. And so you're not alone in that.
Thank you. I did see, Andrea, I saw that Peter Engelbrecht made a comment as a fellow wine consumer, that he says we drink all the best wine and we export the bad stuff. So I can certainly agree to that. I had a university friend called Peter Engelbrecht, so I was just for a moment thinking whether it's the same guy. Peter, ek weet nie of dit jy is nie, maar in elk geval. Kom ons gaan nou gou na, is that okay? Everybody happy if I continue with legal and compliance?
It seems that as there's no forthcoming questions, so yeah, we can definitely proceed. Thanks.
Okay. So two that I didn't change. I left number 43 and 46 because I think it's still relevant. And I also left the ratings where you had them the last time. I've added two risks there, or two potential legal and compliance risks. Initially, if I remember correctly, you didn't have a category called legal risks, and so forth. Two things. The one is, let's start with number 45. The Poppy Act is a massive piece of legislation that was that came into life or became alive or implemented last year, 1st of July. And in the training academy, we found that in many instances, we found institutions that actually asked us to do one of two things. The first thing is to review their policies to make sure that it's POPI compliant. And specifically, Christo and Andrea, is not only your policies, but all your contractual agreements. Because you work in such a vast organizational structure, there's a lot of information flowing up and down. And in terms of the POPI Act, there's really a big dangers of leakages of personal information and so forth. So I think we need to, I think I've probably rated it too low. I didn't want to make it a big issue, but I think the POPI Act and compliance with the POPI Act is a potential killer, in the sense that your fines can be up to 10 million rand, and that is for a leakage of personal information. And then in addition to that, anybody whose information has been leaked can also sue you and claim damages for that leakage. So I think just out of the pure nature, because the POPI Act is there, I think what we need to do is we need to revisit, or you need to revisit your policies, your processes, and specifically your third-party agreements in terms of personal information. Reason I've included here, SAFCO went through this exercise and very, very assertively went through this exercise. And they seems to me, you know, that they're working in a similar industry, and that is worth your while. Number 44, I have thought it might be irrelevant, and somebody might say, Deon, just take it out. But one thing I've learned from City of Cape Town, the City of Cape Town employed a woman with the name of Sia Barshe. And Sia's main responsibility is to scrutinize court cases that is relevant to the business of City of Cape Town or of a municipal environment. And she is creating a database of new legislation, new policies, new documents that might be out there, where early notification or early notice of that becomes really, really important. So I'm sure you're doing that already, because there's a lot of legislative participation processes that you take part in. But what Sia also does is she takes those court cases and those decisions, and she builds I'm sure she has a fancier word for that, but she builds a database of real-time case law. And then that case law is often influences the design of their policies. So there might be some judgment that was given somewhere that is affecting the way the City of Cape Town is doing their business. And that is the only municipality that I know that is on the forefront of looking at case law, understanding it, interpreting it, adjusting to it, and 9 out of 10 times, that case law is actually bringing benefits to the City of Cape Town. I've seen Sia doing several presentations over the last 5 years in the Revenue Management Masterclass, and I think on her own, she made huge inroads into revenue management in City of Cape Town, because she understands, you know, all these case law. I'm not sure if that is relevant, but I imagined when I put this risk up there that I thought that there are a lot of court cases between farmers and the government, and between farmers and the local government and the municipalities, and there's and about water. And if you look at Koster, you know, the court case where what is that farm, the yogurt farm, you know, that moved out of Koster to KwaZulu-Natal, and those court cases that flowed Clover, when Clover left Clover, you know, those type of interventions. And I thought maybe in all those court cases there might be lessons learned, where in our effort to influence and our effort to make a difference, there might be value in that. And when I put it in there, the rating is 72. I think it might even be higher. But I think in terms of legislation and regulations and so forth, I think you're on the forefront. You know about them, you participate. It's about those court cases. Those are the legal and compliance risks that I've chosen for. I'm sure there are more. I wanted to highlight the 4 that I think, or the couple that I think that is really important to you. I don't know if there's any comments.
I'm opening the floor. Janse, you are our head of legal. Can you foresee any additional commentary here?
Yeah, Andrea, I'm hesitant to say this, but number 44 doesn't seem correctly weighted. I think this is Agri SA's reason for existence, is access to real-time case law legislation. Where the structure perhaps lets us down is that we're not involved at local level, so we don't have necessarily the access to bylaws. But on a national level and to an extent a provincial level, and also as far as case law is concerned, I think we're at the forefront. I don't think anybody has the resource or the resources at our disposal. So to me, that does seem a little bit out of, that kind of seems a bit high for me.
Do you think it needs to be lower?
Yeah, I'm not sure that that's a risk at all. That's my feeling of it. Is I'm not sure that's a risk at all. I think that is what we do. That is, we look at case law and legislation.
All right, that's your reason for existence. Okay, can I? So one of those, personal things. I just want to see if I can push it through or not. But we can take it out. I think what I wanted to say here is not that you're not doing it. Do you have a sufficient information system that gives you access to these things as and when they happen? Maybe that's more a technological type of risk. Okay, I hear you. I can take it out. It's not a. I'm not feeling strong about it. I just thought, I need to put a legislative risk there. Let's try that one. I get it. I will take it out. Are you happy with the POPI Act though?
I'm certainly happy. That is an enormous risk.
Yeah. All right. Thanks for that.
Deon, Johan Beger.
Yeah, good morning. I just think, we can sort of do the wording of the labor laws a little bit different. Labor laws in general, yes, is a risk, but I also think, that the increase, the 7% increase in minimum wage, we can change that to above inflation increases over the last 10 years. If you're happy with that, Deon?
Okay, just repeat the last sentence. I missed that. I got up to 17% and then I missed the rest.
17% increase in minimum wage, change that to above inflation increases over the last couple of years.
I will do that.
That's a little bit more in line. And then also your bargaining councils here. We are not part of bargaining councils, and we're actually still part of the determination law, so sectoral determination. So I think we can take that part out as well. I don't know if you see that as a as a particular issue.
Okay, I can take that out as well.
Okay.
I actually got the wording. I got it from your 2020 risk register, and I can adjust that. Yeah,
no that's problem. Perfect. Thanks. Yeah. Okay.
All right. Just want to see, there was a comment on the chat box. Okay, Robert Darvel spoke about the fact that additional power to government in terms of the state of disaster. Robert, I think that is probably a big external risk, and surely, if we look at the quantity and the vastness of the fraud and corruption that happened at the time, surely that must be a risk that is affecting everybody. So I think it can be an external risk. And therefore, if we put it there and we just notice that, that is on our radar, then I think it's okay. I can add that. The challenge with a state of disaster, and I'm sure you all know better than me, is the fact that it takes away the role of the bid adjudication committees, and it makes the tender processes shorter. And the challenge with that is the fact that when we go out and tender, we don't write the specifications properly. And because the bid adjudication committees are not sitting, then you get all these hands in the in the pie. Everybody wants a cut of the cake, and so forth. So certainly it is a big risk, and I can include that. I'll do it at the top end. Just want to make a note of that.
There's another hand, Christo.
Yeah, Arwen. I think Arwen, as our company secretary, are you happy with those legal and compliance risk, or are there any particular risk, especially from a board level perspective, that you perhaps want to also list here?
Not particularly at the moment, Christo. I think the general rule is just that we live in a world that's become bogged down by regulation, and we have to comply. I think my prime focus as company secretary obviously is on compliance with the Companies Act and the requirements that we need to follow those steps. But in general, also to advise the board on legal risks, and I think this register will be invaluable. And I think Janse and Andrea has done a great deal in assisting us and assisting the board in formulating this. So I think after this, we will review it again. And I think what I should do is to start up again with Janse and Andrea and look at it from a board perspective, what there is that we additionally or particularly needs to draw out from this register, but has to do with the functioning of the board itself. I think we've gone through a process, particularly now that we've converted to the NPC, of getting us to be more focused on actually complying with all the rules and regulations as required in terms of the Companies Act. But this obviously is a broader perspective, which we do require the board to be advised on as well. And I think this register will be a great tool in doing that. Thanks.
Thank you, Alwyn. Deon, do you want to respond, or can we take Jansen?
Yeah, Alwyn, can I ask you, when you look at this again, that you specifically in terms of the Companies Act, just think of whether we should add, non-compliance or key issues maybe added here in terms of the Companies Act. I'm not uncomfortable if it's not there. And it's also, we don't need to list it if it's not listed. Your audit reports have been clean. There's a lot of good governance structures that you have. So if it's not really a risk, I don't think we should put it here. Then it's it's not significant enough. But if you think of anything, then please let me know. It's unique to your business, and yeah, I would appreciate any assistance with the legal and compliance. I think we need to stick to 3 or 4 of them so that we can focus on them. And yeah, thank you for that.
Just to put it in perspective, we've got the audit here. If you look at Agri SA in isolation, as an organization, it's actually relatively small. I'm talking about Agri SA at the top part. I'm not talking about all the members and affiliates and everybody else. If you look at it much broader, then it's a huge conglomerate of various organizations. But Agri SA in itself, if you look at it as an organization, it's actually relatively small. We sit with an asset base of maybe 240 million. And we have an annual turnover of somewhere between 25 and 30 million. So it's not a fish and chip shop, but it's definitely not a large organization from that perspective. What is odd about it is that because the way that the regulations to the Companies Act was written, we trigger the public interest score, because it says, particularly when you look at NPCs, you have to look to our members, and if our members have lots of members, we have to count all those heads. So we do trigger the public interest score and actually have quite a high one. And accordingly, internal structures like the SETCOM and the Audit and Risk Committee is definitely playing, and going forward, going to play a larger role in ensuring our compliance as well.
Okay, thank you. Are you? It's a silly question. Are you subjected to the PFMA?
Sorry, we missed you, Deon.
Are you subjected to the PFMA?
No, we're not.
Finance
We're
not.
independent. We're not government. Yeah.
All right. Okay. Andrea, is there another question?
Yes, Janse.
Yes, Deon, I'd love to hear your thoughts on what I think is an enormous risk in South Africa of overregulation. I think we have enormous overregulation, too much red tape on the one hand, and then simply an inability to enforce. Overregulation has these unforeseen consequences of nobody ever being in a position where they actually operate lawfully. And then obviously the opportunities for corruption at every authorization stage that a person has. So to my mind, and I know that national government is also paying attention to that, is that I think we have too much red tape, we're overregulated, and we don't have the capacity to enforce all the legislation that we have. And I see that as a risk, but I'd be interested in your views on that too.
No doubt, too much red tape. I had a long session with Ellen Ziller about 5 years ago about red tape reduction in the Western Cape, and I know the current Premier, Ellen Winnie, is also driving a red tape reduction program. And in Saldanha, with the investment center, they had some successes on that red tape reduction. Definitely, I agree with you on the accountability and the enforcement. We have all these laws, and we never enforce. And that is why we have an excellent, if you look at South Africa, our rating in the world in terms of legislation and the design of our legislation, we're in the top 5%. But if you look at the size of our corruption, we're in the bottom 5%. And it's because of that lack of accountability and enforcement. So it is there. I'm just thinking, how do we if we put it there as a risk, and you know, and this red tape that is taking forever to get us to decisions. Okay, Janse, can I think about it? I agree with you. Overregulation, I agree with you. Lack of enforcement. Can I think about it, and then I'll put it in, and then you can, when you review it, you can give me comments on that, and the team can give comments about that. Our challenge is, well, let me. I think I can say more about that. The Defence Force and the South African Police Services at one stage got around this massive red tape issue by going out on a contract that allowed them to procure spare parts for aeroplanes and helicopters. And they went out on one contract, and everybody could tender, and then eventually they locked in the margin. So the company that won the tender could procure the stuff without going out on tender every time. They could just simply buy it, and then they could sell it to the Defence Force or the police at a 15% margin. You had to verify your purchase price, and then you know, the 15% margin was easy to calculate. And what happened with that is they actually reduced the waiting time for spare parts. They reduced that from something like 9 months to a 48-hour delivery period. These guys that won the contract were extremely efficient. And we got a lot of our helicopters and aeroplanes, you know, Defence Force aeroplanes in the air again. That contract expired now about 1.5 years ago, and there's not enough money in the Defence Force to give that contract again. And obviously now we are in the position we are with our fleet, our aeroplanes and our helicopters. You know, so there are tools that government can use to get around this red tape. They also do that here in the Western Cape. When they give us education contracts, they tender for 3 years, and then you know, normally when as part of the university we will tender for those contracts, and then for the next 3 years they don't have to go out on quotes or whatever. They send us the training requirements, and then based on that tender we run it, but the prices are fixed for those 3 years. So that there are ways to get it around the red tape, but I don't think that is your angle. Your angle is you are frustrated by that red tape, and the government is not making that easy. I think it can be up there, maybe as an external risk, and then I'll put a rating there, and you can give me a comment on that. Oh, there's wonderful contributions, Andrea and Christo. I really like your the depth of your knowledge and skills that you have in this team. It's amazing. Okay, we're almost there. Social risks. On your previous risk register, you used the word social. I tried to get a word that worked for me. I decided to stick with social for the moment. But these are if you look at King 4, when they talk about profit, planet, and people, people have two angles. It's the people that work for you, you know, the people that are employed by you. But also in this specific case, you know, the people part in the King 4 report talks about your community. And what is happening around your community. And I saw social risks as part of the King 4 people community type of risks. So 47 was there before, you know, it's crime, security, rural safety, and corruption, and with all the consequences. And I kept the rating as it is from last time. There's incremental increases and challenges with labor, skills, and unemployment. It flows through, forward from your previous risk register. All I've done is I've just split the definitions into 3, because I thought we can just, you know, maybe separate them into 3 different things. So the one is social unrest, xenophobia, that every now and again happens, that might have an effect on you. The second one is excess labor. We have this massive supply of labor against the minimum wage that is really sort of influencing your input cost. And in an economic model of supply and demand, it doesn't make sense. And I think, you know, farmers often end up using Zimbabweans because, you know, they might not fall under that minimum wage rate, or they might not, you know, there might be other benefits and so forth. And then the last one is the fact that you have, that you identified last time, is the lack of skills. And we have a lot of people that would like to do the work, but they simply don't have the skills to be employed in any environment. So I've just separated them, but I mean, it talks to the challenges with labor. High population growth, it is a big issue. Specifically, I think on farms, we recently moved from Blobergstrand to Philadelphia, and Philadelphia is surrounded by wine farms and wheat farms, Koringplaza, and there's a very small village, really small. I think there's about 22 houses in the village, but on those 22 houses, there's 325 people staying there, of which 155 is children. And there's absolutely not enough work to sustain the livelihoods of that small community. And wherever you go, there's illegal occupation of dwellings on the different land and so forth. So this is the high population growth is driving the issue. Food insecurities is something that you had on your risk register before as a social risk, and I've kept it there. And then, of course, the migration of people, and specifically refugees, and we look at the Zimbabweans and the fact that there's ineffective visa control and so forth. And that is also playing an impact. I didn't change a lot of those risks. You had many more, and I decided in terms of a strategic risk register, I will just retain the 5 critical ones, and that is what I've done here. You might be finding that you want to add to that, I would imagine. I stuck to 5 because I already had 58 strategic risks, which is just too many.
Is there any inputs from the floor on these risks from the Labour Centre or from Kobus, from your centre?
Andrea Kobus here. Yes, Andrea, in terms of the risk, in terms of crime, security, and so forth, I will have a look at it. But I think also what a risk for us is the inefficiency by the police to combat crime and to adhere to their constitutional responsibility. And if you look at examples, the riots in KwaZulu-Natal, they were absolutely inefficient to react to that situation. And as far as I know, nobody have been arrested for those crimes. If you look at the violent protest actions which occurs, they occur in front of the police without the police doing anything to prevent that. And in a discussion with the police, they said they can't arrest people there because that would elevate the crime and the crime situation. So I think there's another risk for us in terms of crime, is an inefficient response by the police to crime and to combat crime. Thank you, Andrea.
Andrea, if I may ask, do you think that is an external risk, or do you think it fits here?
Deon, I would say it's an external risk because that's a responsibility. It's a responsibility of the police in terms of the constitutional mandate, which they don't fulfill at this stage.
No. Okay, I think it's one that I missed. I should have added in there. Yeah, thank you. See, there's something.
Thank you, Andrea. Deon, just maybe a correction. South African farmers don't use foreigners because the minimum wage might not apply to them. It's quite the opposite. It's more a case of that in South Africa you'll find that the South African unemployed does not want to work. There's a huge percentage of them that would rather sit at home or receive the SASSA amount. They're fine with that. Or they would come in and they would work for 2 to 3 days. Because of the minimum wage, the amount of money that they would earn in those 2 days, for them is fine. They don't bother working for the rest. Whereas your foreigners, they know what it's like to be hungry. They know what it's like not to have food in the shops or whatsoever. So they would work for 7 days a week if we can allow them. So it's rather a thing of in South Africa, we are battling to get people to actually pitch up for work and work, whereas the foreigners, they just work.
Yeah.
Thank you.
I think that's a strong point. Yeah, I understand it that way as well. Jan Sarabi asked on the chat, Andrea, he asked about civil unrest, whether that should be fitting in here. Civil unrest was one of the social risks on your previous risk register, and I've taken that out. But I mean, just in terms of the comments we just had, in terms of on the one side, inefficient police to combat crime. That's an external risk. I can add it there, but it's also social unrest. I think might fit in here. I can add that, and I'll put a rating to it, and then we can decide.
Right. Thanks, Deon. There's another hand here from Deirdre Carter.
Deirdre?
Hi, thank you so much, Deon. Sorry, the generator is complaining in the background here. But yeah, her name is Jenny, so she's very loud. Just a quick one. I just want to add what Neil said about the labor force, okay? But you also have your border provinces that have different challenges. And that is that there's always been an agreement with government that because there's no South African workers close by, that these guys have been working on the farms for 20 years, 30, 40 years, crossing the border on a daily basis. And those are challenges that are not, that is not acknowledged. So what do you do? Do you now get rid of people that's been working you for 20 or 25 years? So besides that we cannot get South Africans to actually that wants to work, and the department specifically in Limpopo recognizes it, but you also have a challenge that you do not have employees because of border provinces. Thank you.
Yeah. I'm thinking, Christo, maybe I can just use your guidance here. So I understand the risk. Is it a risk that Agri SA should be having on their register, or is that more specific risk that should fall under Deirdre's pocket of responsibilities on a lower level?
You see, the issue of labor affects it's a national issue. That's why Agri SA has a center of excellence specifically that deals with labor, because it's a strategic priority that affects all farmers to some level. But the issue of migrant labor is a highly politically sensitive matter. You will recall in the previous election, there was a huge emphasis on expropriation of land. And this is the last thing that we want, again, to become a focus or rallying point for the elections in 2024. And we've seen how small political parties that are based on ethnic nationalism have exploited this. Just on Sunday, there was a chap who was a jailbird, and he started now his own political party, how he's rallying around this issue of chasing the migrants out of South Africa. And this issue was also a rallying point amongst certain heavyweight ANC politicians. And so the last thing that you want is for agriculture to begin targeted because we seek migrant labor. So I think what we need to do is perhaps framing it more broader to say that the shortage of skilled labor and available labor is a big challenge for the industry. But that's more, it's an external matter that we deal on an internal basis as the Center of Excellence take this up with the Department of Labor. I don't know, Johan, am I on the right track here? Johan Wege?
Christo, yeah, I agree. I agree with you making it a little bit broader. Can we sort of make our recommendations after the session, Deon, and send you the changes? Because there are ways to get around this, but it is a very important issue. And it does affect agriculture in general, but it also affects our local employment issues. So will you guys be happy if we can forward those changes to you after the session?
Perfect. I think it's a working document, and please do. And I will, between Andrea and myself, we will update it and republish and reshare again. I really appreciate that.
Excellent.
Just see in the chat box here, there's a chat here, just want to make sure. Okay. It seems like a lot of people, Andrea's getting time pressure now. So
yes.
Maybe I can just, while we have a biggest portion of the audience, I can just quickly run through these risks, and then we can, if people need to leave, then it works okay for them. Is that all right with you?
That's perfect. I just see this hand of Deirdre. Deirdre, do you want to ask the question now, or can we wait till the end, perhaps?
No, we can wait till the end. Thank you.
Great, thank you.
Okay. So thank you for that. I just see people have meetings and they ask to be excused. Okay, so I've added two categories. The one, and once again, I tried not to elaborate into too much detail. The first one is, I think, in terms of technology, I think wherever I've read anything about agriculture in this week, trying to populate this risk register, I saw that, you know, management information systems is what it's all about. And I think if you really want to make good decisions, you need to have real-time, good information with high integrity and so forth. So think about, you know, remember that graph I showed you this morning where we looked at the relationship between performance and risk? What is really important is that we need to start populating our KPIs. We need to measure against those KPIs, and we need to populate our key risk indicators. And the key risk indicators is lying in the future from here. But once we have that, then we get information that can inform. So that's the first bullet point. I think it's something every company needs, every business needs, and you might have a lot of that already. But information is one of your biggest assets, I would imagine. Number two, I did not have a copy of your organogram, and I did read in some of the annual reports. When I read through that, I did see that, you know, there's a lot of initiatives around automation and so forth. I appreciate that and so forth. I think that the trick here is that when we move into the new 5 years, 10 years, and we start looking at those new jobs that will be taking over our, you know, our functionalities and so forth, we're going to need a lot of skills. And South Africa has a very limited quantity of those skills. I've read recently, you know, we need 25,000 cybersecurity experts. We need, I think, 30,000 IT auditors. So those type of skills are simply not there. So I've put that into the risk register that somewhere along the line, if we decide to go the automation route, we need to find staff with the skills. And of course, those skills don't come cheap because of supply and demand. There's simply not a good supply of them. And then I've just put one category there, access and availability to technology, and I've divided them into three categories, broad categories. So the first one is, you know, artificial intelligence, Internet of Things. I don't think it's critical, maybe right now, so I made the rating a little bit lower. But everybody, it looks like the big economic drivers in the rest of the world is lying in this area, artificial intelligence and Internet of Things. I think sometimes it's good not to be the leading institution, because, you know, once somebody else has designed it, you can procure or utilize or start using the software that was built by, you know, somebody else's investment, and, you know, the cost of those type of things come down. So maybe that's the reason why I didn't rate it too high. The next one, it's all about big data. Your business is so vast, and I'm just dumbstruck when I look at all the statistics that you quote in your annual report. You know, I'm just fascinated that you actually have, that you can actually measure the quantity of square meters that have increased in terms of farmland in the Free State. You know, if you do that in the Western Cape, maybe I would have understood that, because, you know, maybe the systems are a little bit better here. But the fact that you can quantify it in the Free State and the Northwest Province means that you have a lot of information, and that is what is called big data. So now we have volume of product, and you start measuring the quantities and the tonnages and its predictions and predictive models and so forth. So I think that is also the tools, you know, one of your economic drivers that the World Economic Forum has said it's about big data, and then to do something with it, you know, is to get that data to inform. I have read in your annual report that you're a group of people that can adjust when there's a demand in a certain direction. You plant a new product that is driving, you know, that will drive that demand and service that demand and so forth. So obviously you have a lot of these things already. Data analysis eventually, and then the big one is data integrity. Data integrity means is the opposite of garbage in, garbage out. So, so having that information, having good quality information that informs decisions, informs farmers where to go and what to do and so forth, I think that's important. And then the one that I've just driven a little bit higher in terms of risk is the third element, and that is once you use technology, it's absolutely critical to protect it. And here I'm talking about hacking and cybersecurity and access to all those systems, firewalls around that information to make sure that it doesn't get hacked. When Swartland got hacked 2 months after the lockdown and COVID, 59 of their systems were hacked, and it's 2.5 years later, and they are still having problems getting some of those systems online. So it's something that I think it's new. If I can just summarize bullet point number 54, I think you're moving in that direction. I saw those words in your annual report, and I think those are the big things. It's about predictive modeling, which is the artificial intelligence part of it. Then it's about the data and what you do with that, opposite of garbage in, garbage out, and then cybersecurity. I think on hindsight, I think those 2 green ones are rated too low. I need to lift them a little bit. And then let me just finish with human resources. I've decided, once again, I try to limit. I don't try to put every risk out there. I think succession plans for all the key role players. I look at your photos on your annual report. It seems to me that 50%, if I may guess, of you are in that space where you need to start thinking about retirement. And I don't know if there's certain rules or policies in your organization, but I think succession planning is absolutely key, and that's why I brought it in. It's about making sure that you have a plan and growing the people that need to follow you with the vision that you have and with the structures you have and with the passion that you have. So I think that is a risk. And you might already, announcing a retirement a year up front to give the board an opportunity to seek for a replacement. I think that is very, very conservative and well planned and so forth. Number 2, transformation. Here's about the transformation of your workforce in terms of the BER targets. I think as an organization, whether you agree with this or not is maybe not that critical, but I think you need to be seen as an organization to drive this. And yeah, I'm talking about your workforce itself. The reason why I've chosen that as one of the 3 is the whole Dis-Chem issue. You'll remember last year Dis-Chem had a terrible negative press coverage about their transformation policy. And I think one needs to manage this proactively and not get into a point where we get that negative perceptions that surrounded the Dis-Chem story. If I may, I think where Dis-Chem also went wrong, it's just something to think about. And I did notice a lot of females in your teams. Dis-Chem made only one area of discrimination part of their policy. And I think they could have improved that policy a lot and the perceptions around that policy a lot if they just included other discriminations as well. So yes, there are discriminations against race, but there's also discrimination against gender. There's also discrimination against age and nationality. So when we look at transformation is not only talking about Black economic empowerment. It talks about gender equality and it talks about all sorts of other things. And I believe gender is one of those big issues that the president is driving very hard. If you listen to his speeches, he's talking about gender equality in the cabinet. He's talking about sexual violence and those sort of things. So there's an emphasis on gender, and I think therefore transformation targets should just consider that as well. I will add that, but with number 55, I only spoke about Black economic empowerment there. And then number 56, the last one, I thought you have an HR budget. In my analysis of the financial risks, I recognize that you are covering your expenses, and we spoke about your different membership models and so forth earlier. But what is also important is that the moment we get into technology, there's probably going to be an expansion of your capacity, and therefore looking at the human resources budget is important, and also funding of that budget. Continuously funding it to prevent retrenchments somewhere in the future. I think that is part of the process, and because it happened with you 2 years ago, I thought that maybe we just need to populate that as a human resource risk. I've chosen 3 technology risks, 3 human resource risks that I think talks about key things that you can address in the next year. Any comments, please?
Yeah, Deon, Christo, I think Agri SA's big challenge is retention of staff. Besides the fact that there were retrenchments, we've seen an outflow of young people who gained a lot of exposure, a lot of experience in Agri SA because they were assigned with very senior tasks. They interact with ministers, they interact with DGs, and they interact at a level where very few young people have that kind of opportunity. Where I come from, it took me, almost 30 years in my career span to start engaging at that level. And then obviously they built a portfolio of evidence that consists of media coverage, it consists of submissions of reports, compilation of submissions, also interaction with, as I've said earlier, with very high level people. So they become very sought after, and there's a lot of poaching also in the organization, in that some of our commodities and even some of the provinces lure them, obviously, with a higher salary. The big difference between Agri SA, where Agri SA is dependent on membership fees, on commodities, they do receive what they call statutory levies. And those statutory levels give them the capability to obviously pay people higher salaries, give them proper bonus incentives, and also ensuring that they have other benefits that we cannot provide because of our limited financial resources. But the big difference between an Agri SA and all of the other entities is that we are politically exposed, because it's our job to reflect on the mandates of Agri SA in the broader public or in Parliament. In other words, if Agri SA decides we are against expropriation without compensation, it is our job now to go into the media and debate it and argue it, and that immediately makes you a political target. So it's a hardest job, and especially when you're young, you will stay for a while, but when you get the opportunity, you will move out, because obviously you don't want to be politically compromised at the end of the day. So what I would suggest is that we look at a salary structure that can help us to retain young people, and secondly, help us to mitigate the risk that comes with that kind of political exposure and possible targeting. That imagine, now let me be frank, imagine you're a young black person, you want to really gain traction in terms of career opportunities out there, and you now have to go in public and defend a specific policy position, whether it's on labor, whether it's on land, whether it's on natural resources. Given the political context, now you have to defend a political position, and that in itself, makes it difficult for people to see themselves as a long-term, or see Agri SA as a long-term, host for help realizing their, career aspirations.
Yeah. Christo, I never saw it that way, and I understand exactly what you are saying, and that creates a continuous flow of young people. So you don't get the opportunity to build this talent base that you want to mature over time. I think we need to add that under human resources, and then maybe reword the funding of the budget, maybe more in line with funding a competitive payment structure in the human resource budget, because that is your challenge. At the moment, you can pay your expenses, so that's not the big issue, but you want to retain staff, and for that you need you will probably need additional funding. So maybe we can, I'll put those two things in, and then we can revisit them when we look at the draft. Right, dankie. There's another question that I see in the chat box. It comes from Nel Kutsia. Nel, what you say is absolutely true. His comment is about data integrity. And Nel, is a more difficult answer, is more difficult than what I'm making it. So if we want to look at data integrity, is what we would normally do is document your process, your process flow, and then we will find we will identify the data flow that is flowing through that process. And every time that you capture or process or manipulate information, you need to have key controls in place to make sure that your information is accurate, complete, timely, and valid. The valid part is the one that you talk about. Make sure that we capture reliable information. But normally, when we look at the controls to ensure accurate capturing, those controls are easy to design. If the controls are manual, and there's a lot of human involvement in the capturing phase and so forth, then you need to put specific controls in place. We call those controls detection controls. So your detection controls will pick up when people make mistakes and so forth. If your system is predominantly automated, then we have all sorts of checks and balances in the processing phase, where you can make sure that information that is eventually accumulated, manipulated, processed, and so forth, that process flow is accurate and so forth. That process is called IT auditing. And there's two ways of doing IT auditing. So the one way is auditing your firewalls and your general controls and your access to information. That's where the hacking comes in. And then the second part, we call it application controls, and that is where you specifically design your application controls to make sure that you do not capture garbage. Because you are right, garbage in, garbage out, and then you make wrong decisions. So there are tools. Once we get to the operational risk register in the processes, that is where we address application controls. So it's on this level, it's just making sure that we have data integrity. Good question as well. Andrea?
Deon, yes.
We had one more question that I almost forgot about. I just want to know, maybe from Christo and from anybody else. Christo, one set of risks that we did not capture here, simply because I could not gather an understanding of where Agri SA enterprises. I can see it's an important part of your business, and I can see there's a lot of potential there. I was not sure if any risks relating to that entity should be captured under Agri, on this risk assessment. So we didn't put anything in, but if it should be here, then I need to go and revisit that and add the risks there and include that in the distribution of the draft report. If you can maybe just guide me on that.
Yeah, I think that is very important, because remember, Agri SA is the owner of enterprises. Although it operates as a for-profit company with its own management, its own board, it remains a asset, or a 100% subsidiary of Agri SA. And I think that is important that we list it. And we've also do have other entities in Agri SA that are sort of arm's length from us, that operate as trust. So there is the disaster trust that Andre is responsible for. It also has its own trustees. And then Kobus manage Agri Securities, which also has its own trustees. And it's not sort of indirectly linked to Agri SA. And then what I want to emphasize is, so here we've got a whole lot of risk on the one side, but if we start listing all of our various entities, our chambers, our centers of excellence, our different committees that are responsible for audit and risk, responsible for finance, marketing, and so forth, then we will have to, and then obviously the entities that operate sort of independently from the governance structure of Agri SA. that we then say, right, these are all of the risks. To what extent does these risks apply to these various entities? And then obviously, what are the specific risks that those entities need to manage sort of by themselves? Because there's an overlap between these Agri SA risks and there's an overflow on sort of direct link to many of the entities where it's applicable.
Sure. Okay, so I will, Andrea, I would like to just then, let's have a session maybe early next week just on Agri SA enterprises, and just before we circulate the draft, include, you know, some risks on that specific entity. Christo, what is an interesting thing, and it's not an easy decision, but you know, sometimes when you have many entities where they run themselves or they manage themselves independently, there are two ways of getting the risk assessment rolled out. So the first one is to do the strategic risk register at the top, like we are doing now, and we're going to end up with a list of risks that everybody is comfortable with, that talks to Agri SA only, and then to take those risk registers and roll them out to all the different other entities, and let those entities start from that strategic risk register and eliminate the ones that are irrelevant to them and add the ones that are unique to them. And then there's consistency across. So that's one way. If you have, and for example, in the Botswana government, they've got 23 departments and ministries and so forth. For them to run a risk assessment top down didn't work, because in April last year, I struggled to get the top guys to sit down and say, let's do what we are doing today. So there we sat with the Department of Local Government, and we could populate their risk register by working with their management. And eventually we had to take the 23 risk assessments at the bottom, and we had to start aggregating them upwards. So that approach is bottom up. It is not as effective. It is because you're starting from the wrong end. You end up with risks on the strategic risk register that's not really relevant and so forth, but it is a way to do it. I think you've done it better, because we're starting with a risk register that I think once we get all the inputs and I've added all the value that you've given me today, I think it's going to be a good starting point. Is it perfect? No, I don't think so, but it gives us a good starting point, and then we can roll it out.
Deon, so I prefer this process that you've mentioned and that we're currently busy with. But if we can just get a little roadmap from you to say, okay, you have these sort of generic list of risk, and then this is what we then need to do, ABC, in terms of populating, you know, the various centers of excellence, their own little risk register, bearing in mind that you know, they are all part and parcel of this bigger family, this bigger ecosystem, and they need to then just add to the current risk register in terms of their specific risk needs.
Yeah. We can certainly do that. Yeah.
Great. Deon, will you are you at the end of your presentation now?
Yeah, so when we discussed yesterday, Andrea, we decided to put the register on the table, get the inputs, update the draft, circulate the draft, get comments. And then once we've done this, there's a second step. We don't necessarily need to do it in the same format, but once you have the strategic risks, we need to tie it back to your processes, because this is just the inherent risk register.
Perfect.
Yeah.
Deon, what I also picked up, and you can correct me, so today's discussion, we saw that there's a lot of opportunities that might be unlocked in addressing obviously each and every risk. And then, like you said, to tie them each with operational structures. So what I foresee that each center within Agri SA need to develop KPIs and key risk indicators, which will then need to be reassessed. And that can be done, for instance, at a center of excellence meeting or quarterly. So each risk will need to be strategic approach by putting controls in place to have a clear outcome, and then capitalize on opportunities. So if you understand the landscape of the risk, you can pull in strategic partnerships. So yeah, I think it would be better to follow a bottom-up approach than in tying that in, like you've mentioned. So the Agri SA board at the end of the day can take notice of the risk, but it will then be the prerogative of the centers to put the controls in place to limit risks.
Yes, yes. Because you see what's happening now is you sit here, you're all the decision makers, you're the senior management team here, and these are the things. What we had to get to today is what is worrying you. And if once you've reviewed this, and you come back and you say, if I get these things under control, then I'll be a successful organization. You know, these are the things that keep me awake at night. So that was step number one. So step number two is now, what are the processes that we've put in place? So here's a risk, and the risk is called succession planning. And we are worried about aging participants here. So what is the process we've put in place right now? And that process might be that there's an approved succession plan where everybody's retirement date has been identified, and a development program has been put in place to get the new incumbents or the next incumbents in a position where they understand what, that type of thing. That becomes the process. Once we have the process, then we need to rate the effectiveness of that process. Is that process working at the moment? Is it reducing the risk? Is it the right process? And then we get to residual risk. So those two things are still outstanding, but we need to finalize this part of the document first.
Yeah, completely agree. Thank you, Deon. So yeah, I think the next step will then be between me and you, we'll finalize this inputs. I also made some notes from my side, and then we'll share it with the members and get more inputs, and then we can have another session later on. But I think this will need a continuous review at the end of the day, just to ensure that we are all on track, and then basically have a strategic plan going forward.
Yeah, I think so. And Andrea, also what is important is the fact that once you've agreed on your strategic risks, I think if you think about way back when the risk management started, people would always ask you, where does it fit in? And the answer was, do your strategic plan, and then let's look at your risk register. And then we define the risk register. But with the development of risk, your risk register is now informing your strategic plan. So it's a circle, it's a wheel motion. You plan something, you identify the risks, you put processes in place, and when a risk materializes, you need to change your strategic plan. So it's a continuous process going forward. I acknowledge that in terms of your own resources and funding and so forth, this is not going to be a process that's going to be maturing in the next 6 months or so, but you can go a long step forward. And as I said to you yesterday, I don't want you to ever think that every time you phone me, there's a cost to it. I've given you a quote here, and I want to see this right through. And I'm not in this for the money. I'm in this for the value. So let's not ever worry about that. We really need to get I want to help you guys to have the best risk register and the best risk management process without, I don't have a cost motive here.
No, thank you, Deon. Yeah, we did talk about it. We really appreciate it. I think if there's no other closing remarks if there is, the floor is open. If there is some of the members on here, colleagues who would like to just add 2 or 3 sentences, if you would like, on this, and then we can start closing. The floor is open. Christo?
No, I really want to thank Deon for assisting us with this process, and thank you, Deon, for being so accommodative. As I said, we're an organization of organizations, and I think many of our other organizations will certainly make use of your services going forward. But for us, it's important to understand exactly how this risk environment look like, because that will inform our strategies going forward, and it will help to drive performance and greater responsiveness through the various structures of Agri SA. Because ultimately, our centers of excellence and our various chambers are all, set up to deal with risk. And if we don't have an organization such as Agri SA then you're going to sit with a problem, because who will then take responsibility for managing those risks? Often we get a question but what does Agri SA actually, do for us? I pay 60 Rand, 65 Rand a month as a farmer, but, do I really get any value from Agri SA? And then we say, yes, go look at the court case on the value general, also the water, transfer case, water rights transfer case. Look at all the other court cases. Look at all the advocacy campaigns that we've launched to assist farmers during times of disasters. Look at the role that we play in highlighting the risk of load shedding on the sector and ultimately on food security. And people often don't understand it because they think that the little bit of money that they pay monthly must give me exclusive, services, which we cannot, as an organization, we cannot provide, because we pick up national issues as Agri SA. We set up, to deal with national issues, policy issues, as well as national trade issues that impact on the sector. And I think this process will help us, I think, to get to what is the reason for Agri SA's existence? And secondly, how can we perhaps become much more proactive in terms of creating a value proposition that will not only focus on the policy issues, but also, on the sustainability issues and the growth issues of the sector. So thank you once more.
Yeah, thank you, Christo, and thank you for the opportunity. I'm humbled and really I wanted to participate, and it is wonderful, and your inputs were really valued. And I think you're on the right track. You're an amazing organization, and I'm proud to work with you guys.
Thank you very much, Deon, Christo. So I'll be in touch with everybody afterwards to share if it's right with you, Deon, if you can share the presentation. There was request, the recording of the meeting, as well as we'll then share the risk register in draft format as well for inputs.
All right. Andrea, can we just revisit the risk register before we send them out?
Definitely.
So we do that, but you can share the presentation, and the rest of it you can share immediately. Perfect.
Excellent. Yeah. Andrea will also just put a 2-pager together on on some of the key discussions that we've held and the key thought frames, because that's important. We've highlighted this whole issue of financing mechanism, cash flow, all of these things, and the proactive role that we should play, and so forth. So that we just have a summary, because that will lay obviously the basis for future strategic discussions and help us to guide and our thought patterns. Thanks, Deon. Thanks, colleagues. Enjoy your Friday. We have quite a hectic week that lies ahead next week. So best of luck to you all.
Thank you.
Thank you.
Bye, Deon.
Totsiens. Bye, dankie.
Baie dankie almal.
Baie dankie almal. Totsiens.
Totsiens.
Andrea.